All right. Hello, everybody. Welcome back to the channel. It is Wednesday, October 30th, 3:32 p.m. We are here once again for another episode of the Market Close. But on this episode of the Market Close, we've got a lot going on. We've got Robinhood, a company that we've been talking about on the channel for the better part of a year now, and they will be having their Q3 2024 earnings. We will be streaming their call at 5 p.m. So it is going to be exciting to see kind of the numbers and the growth that they put up and what they're able to do. On top of that, you've also got a lot of other companies. You've got Meta, you've got Microsoft, you got Etsy, you got Coinbase, you got eBay, you got Starbucks, you have Roku, you have Twilio, you have Carvana. There's just a lot of stuff going on after hours. Meta and Microsoft obviously being the biggest ones. You got MicroStrategy as well. So we'll get the results for pretty much everything at 4. Robinhood tends to come out like 4:05. But at 4:05, it's going to be crazy because there's going to be a lot going on. We'll see what we can prioritize, just trying to get results from everywhere. And we'll try to analyze and break it all down. And then at 5 p.m., we will have the call. So it's going to be a big, big day. I think there's over a couple hundred companies reporting today. Second real big day after big tech earnings, after Google went yesterday. And so we've got a lot to break down and a lot to discuss. And to join me to do what I need to do today, ladies and gentlemen, one of my favorite people on the planet, Mr. Arnie. Arnie, what's up?
Yeah. Grateful to join my other favorite people.
Are you excited today, dude? This is a big event just for the markets in general. This is big.
Look, I knew that today there were like many companies dropping earnings, but I literally had no idea like how many. Like this is the number of companies reporting earnings like today.
Yeah, it's a lot. And so
I mean, this is a list that could be approximated to infinite number.
No, I mean, literally. I mean, and they're also impactful companies, right? Like usually Robinhood doesn't report the same day as Meta and Microsoft. And then you've got, DoorDash coming in, which matters for the consumer. There's just a MicroStrategy, obviously, from a Bitcoin perspective. I think the reason all these companies are reporting today is because we got the election coming up soon, and they kind of just want to get it over with. And they're like, all right, let's do it. We'll see what happens after the election, and we'll keep going from there.
Yeah, I actually got asked the question, but why do you think Palantir didn't report earnings together with all the others? It's like, actually, why should I do that? Yeah, like for them, I think the risk is that all the attention is more on the elections, but at least you're not in the middle of like everybody's else call, because you need to think that when you have like so many earnings calls, also the analyst can't simultaneously listen to all the calls. I don't think they all developed their own AR agents cloning themselves and writing reports.
Yeah, I mean, at that point, you've got to be able to prioritize the companies that matter. And obviously, there's a bunch of companies that we're looking at today, but Robinhood is one of those big ones that we've got to dive into. So let's start off with that. We got about 25 minutes until the market close. We'll talk about some other companies, but we want to start off with the Robinhood coverage here. First of all, Arnie, you started talking about this company when it was $7-8 back in, I think, July of 2023. What did you see originally at that time, and how has kind of your thesis evolved since then?
Well, I started covering like on socials the company since last year. I wrote a thesis that I think helped many people see the value that was there, despite on the surface that was like, just another unprofitable broker. It is unprofitable, it's trash, bad reputation, and so on. But the reality is that I started studying the company since 2020 because, yes, it was very premature, but I had a feeling that, like I had with Palantir, it's like this company is able to attract the best kind of people for that specific niche. And it is a weird niche. Like with Palantir, it's not only tech guys, but are tech guys that want actually to solve problems. With Robinhood, it's not only finance guys. It's like finance guys that do care of deploying the tools that are available to like the most sophisticated people, the hedge funds, the fund managers, to scale that to the broader population. That is something that many people would say want to do, but in reality, nobody has really tried to do that well. And since the American population is actually big, rich, and very propense to actually invest money. I think there was like an untapped potential that people just didn't want to see at first. Initially with just the trading app, but now the story has emerged to something that is much more than just a trading app.
Much more than just trading over the past 10 months, right? I mean, I don't think you and I expected when it was $7. We thought there was something there, especially because the cash they had was higher than the market cap. But the level of attention they were able to amalgamate and then take advantage of that this year in terms of all the new products they came out with, the speed of innovation, it's just been incredible. I mean, it's absolutely been incredible. We've got one more person joining us for just a little bit here who has also been bullish on Robinhood for the better part of a year now. Mr. Crossroads. Roy, what's up?
Hey, how are you guys doing? Good to be on here.
We are doing very well. So how long do we have you till 4 p.m. roundabout?
Yeah, about 20 minutes would be good. So, yeah.
Okay, cool. Right. So your thoughts, what are you expecting from Robinhood this quarter?
48% year-over-year revenue growth. It'll be close to that, if not. I did a thorough breakdown, probably not quite as thorough as yours, but a little bit more numbers on the X platform. Could be slightly off, but the thing is with Robinhood, we know 2/3 of the numbers basically going into this, and they're really, really good. And they have multiple they're just growing so much, and we know for sure it'll be a third 40% year-over-year growth. And yet we still may see the same pattern. So I've sold some cash secured puts because I am going long. I'm no longer content with just options and exiting in January. I have to have a piece of this. I actually bought some shares too. And any options that I sell in Robinhood, that's just going straight into owning the stock. But it may dump after and during earnings, despite another phenomenal quarter, because we've seen that the last two. People take profits. Some of those IPO holders, maybe VCs, are exiting. And they see it's a very liquid event. So, and we've ridden up a lot. So, but no, the actual company, the performance itself is just immaculate at this point. And there's a few headwinds that are coming this next year, but they don't hit this quarter yet at all. So, right, it's exciting.
So, if you have to mention that one thing that could potentially make people scared.
So the question is, what would be that one thing that could, I guess what the better question is, what is one thing that they could show or not show that would get the stock to sell off significantly?
I mean, if credit cards, which they've not scaled too much so far, but if they have a whole lot of delinquencies, that would be a cause of concern, because that's part of the thesis, right? Is that at the very least, this is going to be a loss leader like Costco Chicken, but not too bad of a loss. It'll still bring people in the ecosystem. That flywheel will generate, those additional products, and those the ARPU will continue to climb. But if the loss leader, if Costco Chicken ended up costing Costco $30 per chicken, they'd be like, well, maybe we need to rethink this. And so I think that's really the only thing that I see. Everything else looks really, really solid. Even the interest rate cuts, which do hurt them a little bit in the future on a couple of legs, that happened September 30th. So that's not here at all. Robinhood also uniquely doesn't provide guidance. So I don't know what could go wrong here, other than just, a lot more is priced in now than when Arnie was pounding his fist and saying it's $8, people should buy. This is stupid. And I bought it at $9. Yeah.
Arnie, any thoughts you have on what could send the stock down 20-30% today?
Well, I believe the potential risk could be on the transaction revenues, because if we are fair, the latest months have not been that particularly strong, but have been a couple of days, very, very good days for trading, like at the beginning of August, when the VIX spiked and the market dropped, but then it all recovered relatively fast. And if I remember correctly, in September, then it was more or less a quiet month. The market kept rising, but no major volatility events.
Yeah, the first week was bad. The first week we went down 4% of the S&P, and then Jerome cut rates. Mr. Powell, I can't say Jerome. Mr. Powell cut rates on September 18th, and that was your volatility event. So I agree with you. July was great. August was September was bad, and then it got really good, but was it good enough to make the beginning of September offset? Right.
There was a lot of interest in the overnight trading in September, if you recall, and nothing broke, which is really nice. So China, the China trade began to heat up. And just because those markets are open when we're normally closed, there was phenomenal volume that I noticed, on Alibaba, on JD, on many of these other names. And that's not all Robinhood, like it's boats as well. But no, I think that September will be good. Like even if it just kind of comes in, a little bit softer than August and probably softer than July, let's be honest. Those are really good numbers. Like at the very least, they're going to put up what they did the previous quarters, and really the options contracts. That's where they make a lot more money than the equity notional volumes. So, and the margin book is like really exciting. Just the fact that they did what they did last quarter, despite actually cutting the margin rates. And of course, we won't see the full benefit this quarter, but those transfers that they're doing, where they do the extra 1% on top for that 10K margin book, that's not only good for futures trading that they're launching in the future, pun not intended, but it's also really good for that margin book. Even as rates are cut, like they already have the lowest rates. They don't have to trim that necessarily. They are just well positioned. And I love the fact they have no debt. It's just big pile of cash that they can deploy to get things like Bitstamp. Did you guys see the news with Bitstamp securing that license in Europe?
I saw something about this today. So
yeah, I can share this.
Okay, while you're sharing that, Arnie, so to finish off your thought, basically you think September is going to be but that's okay because the rest of the
you are leaving the market daily, like twice per day, and during the day, like essentially you're in the market. What's your feeling of October, like the beginning of Q4 compared with Q3? Because we need to think that earnings, yes, are cool, but is a photography of the past. What really matters for the market, for analysts, for investors, is how the company is actually doing now in relation to what it could potentially do in the next quarters from now. I have a feeling, but I want to know your perspective.
Yeah, so I'll give my perspective. Then we get this Bitstamp news. Then we'll go to what we think in October. I think October's gonna be great because October, I mean, so far markets have gone up. Like there was supposed to be this crazy pre-election volatility. All that volatility went to the upside. We're at all-time highs. Option contracts should be higher. Deposits, as Roy was mentioning, those 2% bounces. Like I think Hood Week was phenomenal in the 1%, 2%, 3% brokerage matches for the IRAs and the margin bounces. I think it was so good that Robinhood said, hey, we're not going to give you the 1% deposit match until November 25th. And after November 25th, it's done, because they had gotten so many deposits that they realized they don't need to do this extra incentive. They can save on costs, and organically they're growing so much that it doesn't really matter. So I think net deposits are high as well, along with trading volumes. There is
also one word that fits perfectly into this. What's the price of Bitcoin right now?
Almost 72. It's 71 something. I was about to say that heated up tremendously in October. They call, in the crypto world, it's called Uptober, and that's for a reason. So.
I didn't know that. But I was looking at the slide that we showed previously, that the crypto notional volumes hit that 23 billion volumes traded exactly when Bitcoin reached the price where we are here now. Obviously, that was feeded by the ETFs moves, if I remember correctly. But the fact that Bitcoin rises automatically stimulates also more people trading. And who knows, if Bitcoin maybe reaches 100K, that could trigger another really good bull cycle, which from the broker perspective, that's like a blessing.
Yeah. Okay, so speaking of crypto, then we have this Bitstamp stuff. Robinhood acquired this company a couple months ago. What is the news here?
Yeah. So this is now, they've officially been granted a license in Europe to be able to offer crypto derivatives. And so basically, there's not many crypto companies that need to do that, that have the ability to do that. And the way that that's set up, Robinhood should be able to benefit from that. So it's good not only for crypto trading and to scale that through Europe, it's also good for futures contracts. It's also potentially, although I don't fully understand the legal ramifications of that, it sounds like it's going to be a lot easier if they wanted to launch to mainland Europe, that they can, not just with crypto trading, but with stock trading as well. So we'll see. But yeah, they've done well with, as far as regulation. This is on Cointelegraph.com. People can check it out. It's a lengthy article. But I think that this is one of probably many reasons why Bitstamp was acquired was just for this regulatory approval. This way, it's already built in. It's not something that they have to go after, and that will help them further scale internationally. So it's awesome.
I would add a little point to exactly what you showed, that yes, from our standpoint, having a company that is already there, operative, and embracing regulation is great. But there are like two words that triggered my attention in that previous article of Bitstamp. Could you share it again, please?
I suppose.
Yeah, and the other thing about Bitstamp is they only paid $200 million for it. I mean, it's relatively cheap for what they.
It's nothing, especially when you have like the tech infrastructure, the clients you can scale the offering to. Look at those last words. Bitstamp is now authorized to offer crypto derivatives products to institutional clients.
Mm-hmm.
Wait a second, but Robinhood was a retail-only platform. And do you remember Vlad in one of the latest interviews? Mentioned, oh, well, yeah, we are considering also expanding to providing some services to institutionals. And it's like, now we're seeing the picture.
Yeah, and I think what that speaks to is, and it truly is just an incredible story this year. The vision that he has as a founder to be able to take this company to new dimensions, new markets. I mean, they just launched election betting the other day, and that's helping them get a ton of new users that care about betting on the election. They're able to ship so quickly, build so many products. At an interview yesterday, he was saying, I want to do multiple events a year just so it incentivizes me to keep shipping products and puts the company on the right direction. And the stock market's reflecting that. I mean, when your stock's at $7 and the company is deemed as dead, and then you just keep pushing, and then the growth matches up to that at multiple 40% growth quarters that we've seen, and hopefully another third one today. I think that's why the story is so exciting right now in Hood.
Mm-hmm. Have you noticed that the revenue estimates for the quarter are actually down compared with the last quarter?
That's probably because of Say Technologies. They acquired them a couple of years ago, and with the company proxy materials that they furnish, they get a big bump in quarter two that they don't get the rest of the year. So when I was calculating revenue in the beat, I was keeping in mind that there's, I think, somewhere around $30 million falling off. That's just a seasonal bump from Say. So if you look at like quarter over quarter, you'd be like, oh, wow, Robinhood's not doing too well. I think it'd still be up, but last year it was down a little bit. But year over year, that's where the growth is really measured. That's why institutions tend to measure it year over year, because there are those seasonal features, even where you don't expect, like with Robinhood. So,
well, the insane stuff is that even if you consider like revenues staying flat or like slightly below, they can easily reach like a 40% year-on-year increase.
Yeah, they would have that, like, even if they decided to just shut down their platform for half of September. I don't know why they would do that, but they had such a killer 2 months before that, and just continue to grow and scale. And the comp isn't particularly difficult either, so that kind of helps. This is also, keep in mind, as far as like PE ratios, PEG ratios, those sort of things. The regulatory quarter, where they ended up, I think, paying the $85 million in regulatory fees. That is rolling off the books, and it's being replaced by this quarter. So the PE ratios are going to look a lot better after this.
So that's important about Q3 last time when it fell from like 11 to 7. It's because they had to pay $95 million in regulatory fines, which made them unprofitable. But they would have been profitable had they not had to pay that fine. So those are things where you have to really look as an investor, like, did they deserve to go down because they're unprofitable and the street thinks they're, the PE is too high, all this stuff. It's like, no, they're going to be profitable. This was just a one-time event, but that created an amazing dip opportunity. So the EPS of this quarter in comparison to Q3 is going to be gigantic. And the big question mark here, which I'll ask you guys, do you think they bought back a significant amount of shares on August 5th or no?
No, that'd be awesome if they did. But yeah, they talked about buying back over multiple years, and it's just $1 billion. So I'm sure that they bought back some, but it'd be amazing if they're just like, all right, all in. That would be great. I just don't expect that.
I would say don't underestimate Vlad as a trader. And I say that because if you think of it, he made the IPO in the perfect moment. Like he couldn't choose like a better moment to go IPO. He couldn't choose a better moment to buy back shares from SBF at the bottom. Essentially, he repurchased the shares that he sold like at a 5-10x valuation, and he announced a further buyback, if I remember correctly, when we were like in the 20-something zone, 2025. So I don't like underestimate the probability of them having exploited the dip. Maybe like not 1 billion, like, but I think they did some buyback there. Guys, if you allow me, I have a question for you on something that is moving around my head, because I think what we are seeing in front of us is literally like a paradigm shift into people perceiving Robinhood from, oh, this broker where I can just put 5K, 10K, to something where people are actually throwing in money, and in the order of not thousands of dollars, not hundred thousands of dollars, but millions. And yesterday, Amit shared another account that became viral on Reddit, Wall Street Bets, just dropping 10 million on Robinhood, getting 200K in bonus. The question is, this guy essentially transferred ETFs, so not the stuff that could trade massively. And I received some comments like, okay, but you're giving a 200K bonus to this person. How are you expected to return on your 200K investment to acquire these customers?
Right. Yeah, it's funny because this post went viral and I posted it on Twitter, and this person transferred from Vanguard, Fidelity, JP Morgan Chase, and E-Trade to Robinhood. And so people who are usually at those platforms don't tend to use Robinhood because it's not perceived as a serious place to keep your money. That sentiment, I think, has changed over the past 10 months. And it really changes if someone brings over 10 million. So the question is, how can Robinhood get that $200,000 back if that person's not trading, right? Those ETFs are just held on the platform. I think that this is where Vlad is a genius. Comes down to user experience. If Vlad and the team can get that $10 million account to actually fall in love with the product and upsell them into meaningful things they can engage in, they will make that money back just by further deposits from that account into the platform as they make a yield off their AUC. So to me, it's not a question of is that person buying a crap ton of options or taking a ton of margin, which usually a lot of these big accounts tend to trade more, which is where they make up the money. But if they can just get that sentiment of that person feeling Robinhood safe, because that $10 million account probably knows a ton of other people that have $10 million that would be willing to come to Robinhood if you would give them 100, 200 grand to switch. But that user experience has to be there.
Mm-hmm.
Yeah, and as they continue to scale products and make gold more attractive, like, yeah, I can see a scenario. I think somebody mentioned that the original thread said the guy was going to leave after 2 years.
Yeah.
But if he's there and he's like, oh, futures trading, yeah, this is actually really nice, and margin is like really attractive, and the gold credit card, if he actually gets it, it's like, wow, this is a phenomenal thing.
I mean, dude, isn't that every business? Like, you experience the product. You're not going to be like, I'm a lifelong customer to XYZ airline. But then you do it a couple times. You're like, hey, I don't want to use anything else other than United Airlines. And I think that's what Robinhood's philosophy is here with these big accounts coming to the platform.
Yeah, it's like the demo drive of Tesla just on steroids, because you're here for like a couple of years just to get the full incentive. And so, they're not going to make money on every single person that's coming over like this. But I think there's a number that will change their mind when they come over and they're like, okay, they actually have a legitimate platform. All these different features are rolling out. We like the ecosystem. It's safe. I see no reason to leave. So, but some will, and they'll just go out. Maybe like 2 years from now, Schwab is like, oh man, we're getting destroyed out there. Let's give a incentive to get some people back, and they will. That there's some give and take there, but it's really on Vlad and his team to continue to scale and submit new products and features. Like, one of those things that people underrate, and I underrated when it came out, was that 24-hour trading. Is that they have a really good experience. I've only used it a few times, but the few times that I've used it is when, like, okay, there's some ridiculous movement that's not warranted. This is easy just to make a buck from. Or if it's a company that's overseas that, I'm not a China trader, but, and I didn't buy any Chinese stock. Not that that's wrong, but if somebody's like, hey, I want to react to what's happening in China now. I don't want to wait for the opening. Or I've had it before where I'm like, I'm going to have an insanely busy day. I'm not going to have a single minute to look at my phone. Let me lock in my limit order right there. And I'll just put it on 24 hours because who knows, it can spike down for no reason in that low liquidity environment. It's addictive and phenomenal. So, and apparently futures is like that too, because they have to prevent their own employees from using that in meetings. So
like, these are the things that you understand how valuable they are when you see the opportunity and you're not able to capture it. One reasoning that I think could be nice to underscore is when you deal with these kind of companies, you realize how you should never think at the first order consequences. Like the first order consequence is, oh, this guy is receiving 200K to get ETFs. It means that probably this guy is not really trading well. Okay, but what are all the second and third order consequences that actually create value, but they're not generating value like in the first transaction, but over a long period of time? You're referring to the experience. Oh, I have 10 million. Let's use the credit card. Let's see how it goes. Boom, you start generating more flows into that. But oh, the user experience is so good. Let's make a little bit of trading here and there. One day there will be advisory. So imagine something robotized that could potentially have like a percentage of the masses that these clients have. That's potentially a very good source of revenues. And then think of all the implications in terms of branding. You have people like Wall Street Bets has 17 million people subscribed to that Reddit.
Yep.
Amit posted the screenshot of his stuff, 400K views for the post. So how much value just this post alone brought to the company per se, and on the perception that you can actually put so much money into the platform. Imagine this guy being very rich with 10 million, having also all the friends that potentially are millionaires as well. Hey,
there's a lot of people that have a lot of money on this planet, and if you give them some money to make more off their money without doing much, like just transferring, they're probably gonna be excited to take that offer. So it's exciting stuff. We got 20 seconds until to the close. I think we get hood at like 4:05, so it'll be a couple minutes. But we also have Etsy, Coinbase, Microsoft, Meta, eBay, Roku, Carvana, DoorDash, Starbucks, MicroStrategy, folks. This is the global capital equities markets, and it is now 4 p.m. The stock market is closed. And now we wait, and our hearts will beat, and we hope to see green candles galore. That's what we're looking for. All right. If you guys get any results, put it in the chat. Or Roy, if you've got to leave, then feel free whenever you got to leave if you want to stay.
Yeah, I'll stick around a few minutes, but hopefully the earnings drop soon so we can live react to that.
Okay. And then Arnie, if you get any other results, you can let me know as well. So this is the watch list, folks. We got a lot of them on the side of the screen, and we'll see the movers as they move. And now we just kind of wait until these numbers are out. Derek, thank you again. Derek, for the 50 gifted memberships. Appreciate you, Derek. 50 of you just got a membership from Derek. Thank you, Derek. Thank you, Derek, so much for giving. God knows how many memberships you give into the channel. Appreciate it. Okay, Microsoft. Where is Microsoft? They're up 2%. We got a green candle on MSFT. Let's pull that up right here. Now it's red. It was green, but it's red. Someone said they beat in the chat. Now we're back to being a little bit green on Microsoft.
It's up. It's down.
It's green. It's red. It's green. It's red. I feel like I'm a traffic coordinator. That's what I grew up to be, a traffic coordinator. Okay. Microsoft 330 versus 308, revenue 65.6 versus 64. They beat by $1 billion and they beat by 22 cents. They beat by $1 billion and they beat by 22 cents. That's why you've got Microsoft right here up about 2%. Not a crazy move, but in this market where everything is already pretty high, you kind of just want to see these things hold on to their momentum. And Microsoft is doing that right now.
Well, probably they delivered good results for the cloud sector because of all the call of Google, all the focus was around the cloud sector that was accelerating. And the big question is, okay, but is only Google that pulled some strategies to boost growth, or is literally all software companies and legacy companies like investing heavily into the cloud, into AI? Because the key question that is sustaining the market is AI is there, is moving a lot of money, and is gradually delivering value to help sustain the price that imply like earnings growth.
I agree, 100%. Meta's not out yet. I'm still looking for that. Robinhood is up about 0.5% after hours, but no results yet. Coinbase is up a little bit. Again, it's probably going to take a couple minutes for a lot of these guys to come. MicroStrategy down about 3%. They're having results today as well.
Just shared that it announced a 21 billion at market equity offering.
For who?
MicroStrategy.
Okay, so they're diluting more to buy more Bitcoin. So same thing.
Wow.
It's working for them.
It's working, so I guess they keep going. Meta's up 1%. I'm trying to get the Meta numbers. I don't have the Meta numbers yet. You guys are saying Enovix is dumping. Let's see Enovix real quick. Enovix, ENVX, that one. Yes, that's down 7%. I don't know why. They had earnings yesterday and they were good, so I don't know why they're down 7%. Robinhood up about 0.5% after hours. Meta again up 1%. Meta, do I have the numbers? No numbers yet on Meta.
On Enovix, they are doing a public offering of $100 million of common share with an additional 30-day option for $15 million worth of shares. So that's why Enovix is down. Not sure why they're doing that, but yeah.
All right, that's fair. That usually.
What's your personal expectation for Robinhood in terms of variation?
That's true. I didn't actually share that. Look, I think Robinhood tends to be flat on earnings, so it could be flat. But I think if they have a monster quarter, then there could be a Reddit type of move. I don't know if it's 40%, but there could be a 10% move to the upside because the growth is just there. They know the growth is going to be good in Q4, and so the street can perceive all that and still believe that this is deeply undervalued. Given they also have $5 billion in cash, right?
Mm-hmm.
And so the enterprise value is relatively cheap on an EBITDA multiple, especially when you look at the premium they're getting on their growth. And as rates come down, you have more trading volumes, but you also get a higher premium in the stock market if you have good growth. And Robinhood has phenomenal growth as rates continue to probably come down.
I'm hoping it actually dumps, though, like the previous 2 quarters on phenomenal earnings. That's an easy buy, and I want to be a long-term shareholder. I sold puts in the earnings. I actually hope that those get filled, but if not, I have cash ready to go. I also still have the options. Looks like it's pumping, though.
We are up 1.7%, 2% on Hood, 2.2, 2.27. Street probably has some results. We are at $29 after hours. Now we're down. Now we're down 4. Now we are down 6%. All right, now we're down 8%.
Wow.
There had to be a miss to get us down 9% right here. There had to be a miss. We were up 6% for a second. Now it's down 9. Or this is a pump fake and we're coming back up. Some number is pissing the street off right here. Down 10.4%.
Give me 24-hour trading.
Welcome to the volatility of the markets. Okay, so I don't know if that recovers down from 10% because usually down 10% is something the street's upset about. So now we got to wait for the numbers and we'll see. Meta's crashing as well? No way. Meta's not crashing. Oh, Meta's down 6%. Meta is indeed crashing. Again, just one thing to remember, Robinhood was up a lot going into earnings. So it's one of those things you have to remember that when a stock's up this much, it tends to take a breather sometimes, especially after it has a run going into earnings as well.
I mean, SoFi delivered very good results, and it had like a green and then deep red, and today green again. So
yeah. And Robinhood did this the last 2 quarters too.
Correct.
Like, we don't know what the results are yet. I'm not seeing those, but maybe it's on the Bloomberg terminal. But no, they dumped and they had a phenomenal quarter. So that's really what I was thinking was going to happen is a phenomenal quarter and they dump because that's what the stock does for whatever reason. But that's actually the best result for long-term shareholders that want to add is an amazing quarter and the stock just drops anyway. That's a sell.
Okay, so I think, there's a miss. Gap EPS 17 cents, sales 637 versus 650. So there you go. You have a miss, which is why the stock is down 14%. Goodness gracious. Now again, let's get the numbers in a second. But when you have a miss in this market, you're going to get punished. And that's what's happening to Robinhood right now. Again, when you have a miss in this market, given they're already up so much, you will be punished. Press release is not out, but those headline numbers, something had to miss badly for them to miss revenue by 13 million. Street wanted 650. They had 637. My projections were around 645 on the low scale. So it seems like there's some part that they got hit badly on.
Well, Meta is down with beating both revenues and EPS. So
okay, so
there must be something.
Yeah, I don't have the oh, here we go. I got the press release. Okay, no, it's 404 not found. All right, so it's going to take a second. Do I have the presentation? 404 not found. All right. So we're going to have to wait. We're going to have to wait and see. Look, it's a miss. It is not a crazy miss, but it is indeed a miss. And when you're up 120% year to date, you can't miss, you know? It's just one of those things where it's tough. So revenue, okay, so I do have some numbers right here, even though I don't have the full press release. Let me share this real quick. And let's pull this up. Okay, revenues increase. You guys can see this? Yes. 36% year over year to 637 million. Net income increase year over year to 150 million. Transaction-based revenues 72% to 319 million. Okay, so they're lower on the transaction revenues. Options was up 202 million. Crypto 61 million. Equities 37 million. Equities also missed. So crypto's higher. Equity or options are higher. Equities themselves missed, which is I think part of the reason. AUC is up 76%. Vlad says, I'm really proud of our Q3 results and how smoothly our product engine is humming. In the past month, we introduced Robinhood Legend, our new desktop offering, and announced index options, futures, and realized profit and loss tools are coming soon. And just this month, we launched our presidential election market. We have a ton of momentum, and we're just getting started. CFO says Q3 was another strong quarter as we drove 36% year-over-year revenue growth and dropped most of that to the bottom line. We entered 2024 with the goal of delivering another year of profitable growth, so we're excited to have already broken prior full-year records for both revenue and EPS.
If the numbers are out, by the way, the presentation is.
Okay, so let me share this first. Actually, no, let's go to the presentation because that's easier to look at. All right, here we go. Here is the presentation, folks. We're going through it. Robinhood stock right now down 16.3%, down 23.5. Street's not happy about it. Microsoft is up 1.2. Meta's down 1%. DoorDash down 2%. Robinhood right here down about 15%. All right, so 160,000 new accounts in Q4 or Q3. Gold subscribers 210,000. So now 9% of all their members are gold subscribers. So that's pretty in line with the growth that we expected. AUC 152 versus 140. So that's up about 8 billion. Net deposits was 10 billion, which means that in September they added 2.3 billion. That's partly the reason I think the street is also upset. The street probably wanted around 3.5. They added 2.3. So net deposits was probably a miss from what the street expected. 36% year-over-year growth, which look is incredible. 36% compounding is amazing, but down when the street wants 40% and you get 36, that's a miss. OpEx is down. That's nice to see. Down 2% sequentially. Net income 150 million, up year-over-year, but down from the 188 in Q2, and then adjusted EBITDA at 268. So that's down quarter over quarter, but up year over year 42%. Okay. Funded customers 1 million year over year. So that's now 25 million in total, 24.3 on the accounts. AUC is up 76%. Retirement growth, they have now 10 billion in Q3 under custody in their retirement accounts. I expect that number to be up a lot more in Q4, given they brought over a lot of accounts via the Roth 3% transfer. But that one is good, but I think the street wants it to be better in Q4. And then 2.19 million gold. Before we continue, Roy, your raw thoughts as you're looking at these numbers.
I mean, it looks like a good quarter, just not a great one. Double miss isn't great at all. Crypto looks pretty soft. And of course, there is a little bit of hit more than I expected on the net interest, which is interesting because the rate cuts weren't cut until the very end. Securities lending was way down. It was way up in quarter two. I'm not quite sure, why. Hopefully we'll get some color on that.
Yeah. On this net interest, I agree. So we've got a ton of issues here, folks. So 6 million in credit cards went to 4 million. So that's a downward trajectory. Securities lending, I don't know what happened from 34 to 19. I agree with you. That's a miss. Cash sweep is up. I thought cash sweep would be up. Interest on segregated cash, that's down probably because they bought shares, so they have less cash. Margin interest, I said it would be 83 million. It's exactly 83 million, but the street probably wanted closer to like 90 million to really get excited. And then interest on corporate cash is at 67 million. The big miss here was lending and the credit card. even though credit card is not that much, but lending is another 20 million that they missed out on, basically.
Yeah, and crypto, of course, was down. I do see that OpEx expenses actually, it increased year over year, but it's actually down from quarter two, so that's nice.
Yeah. We are maintaining our 2024 expense outlook of 1.85 billion to 1.95 billion. Gap in net income was 150 million in Q3. Diluted EPS was 17 cents.
Yeah.
Go ahead, Roy.
It's really crypto. Crypto just nailed them. If you looked at the slide on page 13, crypto notional volumes is just way, way down. But, seeing what we're seeing and with Bitcoin, the Dogecoin interest and everything, I expect that's probably going to pick back up for quarter four.
Mm-hmm. Arnie, your raw reaction to all these numbers?
I was looking exactly at that slide 13. If you see equity notional volumes, that's okay. Option contracts traded, that's super okay. Crypto, but we know that crypto is going well in Q4, and we have no idea how it could develop. Overall, like the big numbers are still headed in the right direction, and I think that's the most important thing. Like when we invest in these kind of companies, each quarter provides more information, but you need to check, okay, is the story untouched? And I would argue absolutely yes. I'm just a little bit disappointed that I expected to see more net deposits, but it is also true that the Q3 period, in my opinion, was not particularly interesting. And why we also have like the summer. So it could be that in Q2, maybe they got like even too many flows. So it's hard to compete with that base. But
yeah.
I think it's very, very important to see that the adoption of gold is keeping rising, because that's the oil that makes all the engine of the Robinhood ecosystem work. Now, 9% of the customers being subscribed to gold is very meaningful.
Yeah, I agree. And we'll talk about Robinhood in a second, but MicroStrategy down 9%, guys. Carvana's up 12%. This stock has been incredible this year. DoorDash is now profitable. They're down a little bit. Roku's down about 7%. eBay's down 11%. Etsy's up 8%. That's good for the consumer. Coinbase, also a double miss on both. We'll talk about them in a second. They're down 5%. Microsoft up 1%. Meta's down 3%. Robinhood was down 17% almost. Now it's down 10.3%. So you are getting some buyers step in. We'll see what Vlad says on the call. But there are some people saying, okay, 34% growth is not bad, even if it's lower than expectations. And so you're getting a little bit of buying right there on that green candle. And so, we'll kind of see how that ultimately turns out.
36%, by the way, year over year. ARPU's 105. And they did buy back about 100 million, 97 million in share repurchases. I don't see, maybe it's in the appendix, probably is, or it'll be in the filing. What price they got those for, but yeah, about 10% of their allotment for buybacks was used in the quarter.
Yeah, and so if they had not missed on a couple of these metrics, their EPS would have been amazing, because they $200 million worth of, that means they use 20% of their allocated funds.
Ooh, go to page 26. Look at net deposits for September. That's actually maybe something the street doesn't like here.
Yeah, that's exactly what I was thinking as well. Page 26. Yeah, so this is kind of weird to me, because so 2.5 billion is very weird. So there's two ways to kind of reconcile this. September sucked in the beginning. Everyone remembers the first week of September, horrible month. You would probably had a lot of people taking money out of the Robinhood, or a lot of brokerages, right? Because they were getting into cash. They were afraid things were going to collapse. But then you also had that brokerage promotional transfer 1% match, and you had a lot of people depositing. So what's confusing here is why there were so many people depositing, but it was offset by so many people leaving, which that's the net in net deposits came down pretty aggressively. This is the first 2 billion month they've had in over 9 months. Which is weird, because from January to August, there was at least 3.5 billion. That could just be seasonally as well in September, but
Is there the opportunity that people just wanted to cash out some gains out of the platform?
Yeah, that is very possible. Here's the big thing as well. So crypto was worse than I expected, but margin, this number needed to be I mean, I was conservative in my projections, and I said 5.5 billion would get us 83 million. I was correct on that, but I kind of wanted to be surprised, and I wanted that to get to 5.7, 5.6. It seems like at least September, people got really scared. They didn't trade as many options. I mean, 136 million is amazing year over year, but it's down from July and August. They didn't take enough margin out because it's the same thing in August as it was in September, and they definitely didn't trade a lot of crypto. And equities was down. So it's like September was just a crappy month, which kind of messed up the quarter from that perspective.
Yeah, page 33 is interesting too. This is the first time that at least that I've noticed this slide. Maybe I've missed it before, but they actually break down the contribution, the matching that they do for customers. So you can see that leap up from quarter 2 2024 to quarter 3 2024 from 13 million that they paid out to 27 million. So that's a little bit of a drag. They did note at the very bottom bullet point on the right-hand side, we plan to wind down the gold deposit boost program by the end of November 2024. So yeah, it's nice to see this kind of transparency as far as what we're looking at as a shareholder and not have to dig through those. Just an interesting piece there.
I agree. I want to get a couple of these numbers, guys. Let me know what you guys are thinking in the chat as well, and kind of what you guys are thinking about these results and what you're looking at. I want to get a couple other numbers in a second, but let me just pull up the stock chart. And look, we'll see. I think 24, 25 for a business growing at 36% is decent, but it's not up to me now. It's up to how the market interprets these results. And the other thing that's going to be really important now is the October guidance, or the October results that we'll get in probably a week or two. Is that going to be enough to kind of show them that Q4 growth is going off to a strong start? You got down 12.6% right here at 2460 on Robinhood. Okay, cool. So let's get some other results. And then we'll keep going from there. We got Meta, we got everything else. Roy, if you want to head out, totally fine.
Yeah, I got to head out. See you guys. Yeah.
Thank you, Roy, for being here. See you later.
Thank you. Bye.
Okay, so let's get a couple other names, guys. We got the Robinhood call at 5 p.m. Let's get a little bit more coverage on other names, starting with Hood, and then we will keep going from there.
Eastern on Squawk Box.
All right. Well, it's not all good in the hood, at least right now in overtime. Robinhood earnings are out. The stock is down a little more than 13%. Kate Rooney has the numbers. Kate.
Hey, John. Yeah, a miss across the board for Robinhood. So top and bottom line, weaker than expected. A miss on trading revenue. I'm told this was a disconnect between the accounting side due to some of the promotions they're running. A little bit more on that in a second. But EPS 17 cents. It was a miss by a penny. It was on revenue of 637 million. That was shy of expectations, but was up 36% from a year ago. Funded customer accounts slightly light at 24.3 million. Average revenue per user also a miss by about $4. It was $105 per user. Assets under custody, that was a record, 152.2 billion. That was a beat. Transaction-based revenue, crypto and equities, all disappointed. The CFO, Jason Warnick, telling me that they did see record options volume, equity volumes are at a 3-year high, and crypto volume did more than double. But he also described this as a, quote, disconnect this quarter with the street. He said that was due to some of the promotions they've been running to get people to transfer from other brokerage firms. It has to do with something called contra revenue. If you remember that from accounting class, says that it's from a business fundamentals standpoint, says we are nailing it, just had a disconnect with the street on forecasting and how the accounting works in the quarter. Expect that to come up on the call. Also said some of the promotions, despite the disconnect here, they're paying off, pointed to $10 billion in net deposits. Says the economics are good here. Profitability looks good with 77% of revenue flowing through to the bottom line. But you can see the street was really caught off guards on this report. Stock down more than 15% here after hours. Back to you.
All right. Kate Rooney.
So, I mean, if that's their explanation, that it's a disconnect with the street, I guess that's the explanation. Ultimately, I don't think the street's going to care. Now, if that actually is the reasoning, just to be objective here, that the street misunderstood the way they were kind of conducting these promotional matches, which is why they raised expectations, the street could easily correct themselves and be like, okay, this was stupid. We'll buy the dip because we projected too much right here. They're still growing really nicely. But if that's just their excuse to get away with this, to just the consumer's struggling. It's like, no, it's not. They just don't like your shit, right? If that's the reason, then we're gonna have to see kind of how it plays out.
Amit, you are by now an analyst on Robinhood, probably the one I trust the most on the stock. If you need to write a note on boom, right now? Like, what would be your key points?
My key points is very strong business growth. Gold subscribers amazing. Net deposits are strong but weak against what we expected. So, I mean, for example, you got companies bringing in $3 billion of deposits a quarter. Robinhood's bringing in $10 billion. That's a big change, but Robinhood brought in $13 billion and $11 billion the past 2 quarters, right? So now the street's kind of thinking what's going on there. So I think it would be expectations were too high. That would be the title of my note, because gold subscribers were amazing. You've got crypto that disappointed, options that disappointed. Cash sweep was amazing. That went up $2 billion, went from 22 to 24 billion. That's all these deposits going into cash sweep, which they make a nice spread on. However, expectations seem too high. And as a result, you got a disappointment in terms of the expectations and what comes down to the bottom line. On top of that, I would, if I was warning my clients about this, I would say, hey, there's a hint of cyclicality here. The fact that crypto underperformed, that options underperformed, and the fact that September was such a bad month / kind of good month at the end when we cut rates by 50 basis points. It's something to remember if you're owning this stock, which I think I've been saying for the better part of the year, which is that it is a bull call on the market. And if the market is not bullish, then, you know, Robinhood is not going to have the best month. In September, I guess, based on these results, just weren't bullish enough in terms of trading activity.
Mm-hmm. You can send the link to Tanner.
Yeah, Tanner, I'll send it to you on Twitter. Let's take a look at Coinbase as well, get their earnings, and then we'll keep going from there. The call with Robinhood is in 37 minutes, and so we will hear them in just a bit.
Thank you. Big move there for Robinhood. We've got Coinbase earnings out as well. And there it was a miss on the top and bottom lines too. For Coinbase coming in at 28 cents per share versus estimates of 41 cents per share. Coinbase revenues coming at $1.21 billion, also slightly light here. Trading volume of 185 billion versus estimates of 184 billion, transaction volumes of 572.5 million. That was a little light of street expectations as well, was down 27%. Subscription and services revenue coming in at 556 million. This was down 7%, largely due to lower average crypto asset prices. That's one to watch as the company moves beyond simply trading here. But the company also initiating a $1 billion stock buyback, authorizing that. You can see shares are down 3% right now. We've got co-founder and CEO Brian Armstrong joining us to break down those numbers in an exclusive interview in just a few moments. Woo.
All right, volatile after hours. I have no idea what the hell MicroStrategy is doing with buying 30 billion of Bitcoin or something, so we'll get news on that in a second. Let's get Tanner's perspective. Tanner, your reaction to Robinhood.
Surprising. I definitely was expecting more deposits, some of these things that they're paying for. You know, I had total net revenue probably being over, 650, 660. So
did I.
You know, I'm let down in a couple areas, but the reason why I wanted to pop in, I'm actually talking to Vlad again.
Today or like
tomorrow.
Okay. So you probably want to what question do you want to ask?
What's the question you would ask him
that's
right now?
Given these results, what are you going to ask Vlad? Because it's your show.
So the first thing I'm going to say, based on the Jason Warnick question, is you say there's a disconnect between Wall Street. Are you going to start showing off guidance? Like that's your problem. You know, you guys created that. So Shift4 did a very similar thing. They thought that there was a quarter where there was a massive disconnect. So they showed their entire yearly forecast, and Wall Street changed their estimates. So I would like something like that, allow Wall Street to get a little bit more transparency into, forward guidance. And yeah, just a couple other product questions. I was going to ask some stuff about the event contracts and stuff.
So here's my question. Why do you think deposits were so low if they were giving out so many promotional matches? Like, do you think more people in September were afraid of the market collapsing and they took money out of Robinhood?
So I didn't even see this number yet. What was the, based on the balances, the net market gains? Yeah, net market gains actually went up 2.5 billion. I'm not sure.
But what I'm saying is deposits in September were only 2.5 billion, and every month so far it's been this right there, this 3.5 billion, right?
Yeah.
So that is a disconnect, dude. I did not, and this is why my projections really got thrown off here. I did not expect 2.5 billion at all. And I'm trying to figure out what did I get wrong on September that caused that.
I think a lot of it is going to be explained in the earnings call, or at least I hope, because I think everyone thought the same thing, right? Deposits, I was hoping were going to spike due to them paying in, a ton for them. So I'm not exactly sure. But I did like some of Arnie's comments about gold subscribers being the real base here. I look at SoFi very similarly with SoFi Plus. Like, this is the stickiness part of the business. So watching that climb up to 9% is very exciting. And I want to hear more commentary on new cohorts. So last quarter, I think it was, they said 20 or 22% of the users that came onto the platform were going to gold subscriptions. And it's really what makes it 9% is all the old cohorts of clients that are essentially lagging to get this new deal. So
Tanner, let's listen to Vlad real quick, and then we'll keep going.
Everyone, just reviewing our Q3 2024 earnings results, and I wanted to give you guys a rundown in 90 seconds or so. So let's start with revenues. Revenues were our second highest ever, up 36% from last year. Plus, we stayed disciplined on expenses, driving significant profitable growth from a year ago. What's more is that if you look at our year-to-date revenues and GAAP EPS, they broke full-year records, and we still have another quarter to go. I'm also really excited that our strategy to win the active trader market is moving ahead full throttle. At our first Hood Summit in Miami, we brought together over 400 customers, and we launched 3 new products: futures and index options, which have been highly requested. They're some of the most highly requested features by active traders. We'll be rolling out in the coming months. And Robinhood Legend, our new desktop trading platform built specifically for active traders, has been getting great feedback on social media. So customers love the product. The team is really fired up to keep adding capabilities and more assets as soon as possible. Lastly, just this week, we announced Robinhood's presidential election market, making us one of the first major brokerages to allow customers to trade event contracts on the outcome of the upcoming presidential election in real time. Super exciting. There's a lot more to share. So please check out our press release and earnings call at investors.robinhood.com. Thank you.
Okay. Look, the stock's recovering a bit right here. Do I think it deserves... Okay, so Tanner, let me ask you this question before I answer. Do you think it deserved to be down 15% at one point? It hit like $23 on these numbers.
I mean, I think it was just a general shock. I think, you know what? So I heard a couple things. One, I heard Roy and everyone talking about this. The stock is dropping off on good earnings because there's this massive base of venture capitalists that is still a part of this company. So roughly 35% of the outstanding shares is still from like C, A, and B investment rounds. And so these people do not want to hold public equity, and they want to reinvest this into fast-growing companies. And so that's why we were seeing a bunch of dumping. That's not this quarter. This is going to be mainly because just people were disappointed in the stock. But you could see a pullback because potentially maybe there's some part of that where there is, older style investors that maybe just don't want to be holding Robinhood and we're looking for a potential bump. And 52-week highs can definitely do that. But yeah, I don't know. I don't know if 15% is, it's a big drawback for sure.
Yeah, it's a question. Go ahead, Arnie. Go ahead.
No, I was thinking, would you hold Robinhood right now? I think it divides like a 2 categories of investors, like the short-term swing trader or like the long-term investor. And regarding on who you are asking this question, I think you would get a different answer. Because Tanner, you are like a more a swing trader with Robinhood or more a long-term investor?
Long-term.
Okay. How do you see this quarter? Does this quarter affect your thesis?
No, it just delays it, So I still believe in everything that Robinhood's doing. I need to see some cracks in terms of...
The question is there a thesis breaker in this quarter? That's the question. Is there a thesis breaker?
No.
I don't think so either. I think the drop is stupid. I mean, yes, there should be a drop on a double miss, but down 25%, I don't know if that's worth it.
And also, we're just going off numbers here. So the earnings call hasn't even happened. So potentially they are going to address some of these deposit concerns and what's sort of the reason for the drawback in deposits versus the massive spike that we were expecting. So I'm going to have a better answer after the earnings call, but we're dealing with like half information here. But I really do have to run. I'm doing my own thing. But
all right, thank you for joining, man. Appreciate it.
Seriously though, message me if you have questions about Vlad, and then I'll put it through to him.
Okay, sounds good.
All right,
see you, Tanner. Bye. Okay, so we got the call in 20 minutes. Maybe we take a little break from Hood. We'll get back to it on the earnings call. Let's get a couple updates from Microsoft and Meta, and then we figure out what the hell Michael Saylor is doing with MicroStrategy. This guy is going to be the richest guy in the world or something. All right.
Okay, we want to go back to Steve Kovac for more details on Microsoft. Steve.
Yeah, Morgan, we got some cloud growth numbers here and AI data. First, let me give you Azure cloud growth. That's 33% versus the 29.4% expected. A little wonkiness in here because Microsoft did change its reporting structure. So I don't feel super comfortable comparing that rate growth to a year ago. But then again, still beating expectations. And then as far as AI growth within that Azure number, 12 percentage points of that is coming directly from AI. That number continues to grow as well. That is a really important number to see how much, AI is contributing to the Azure growth. Guys, I'll send things back over to you.
Okay, Steve, thank you. We've got Meta earnings out as well as we stick with the Mag 7 here. Julia Borston has the numbers. Julia.
Morgan, Meta beating on the top and bottom line, reporting revenue of $40.6 billion, ahead of analyst expectations of $40.3 billion, and at the high end of the range that the company gave. Now, earnings per share of $6.03 were well ahead of analyst consensus expectations of $5.25 per share. Meta's daily active people, 3.29 billion. That is up 5%, which is also a hair lower than expectations of 3.31 billion. Now, in terms of guidance, Meta guiding to between 45 billion and 48 billion in fourth quarter revenue, the midpoint ahead of the analyst consensus of 46.3 billion. Now, for fiscal 2024 total expense guidance, Meta bringing down the top end of its range. Now the range is between 96 and 98 billion dollars, down from the prior 96 to 99 billion dollar range. Now, for the full year CapEx guidance for 2024, Meta bringing up the low end of its range, now guiding to a range of 38 to 40 billion. The prior range was 37 to 40 billion. One note here on Meta's Reality Labs division, its revenue of $270 million, short of estimates of $310 million, while Reality Labs' operating loss of $4.4 billion was less than the $4.7 billion loss analysts anticipated. Mark Zuckerberg saying in the release that the good quarter was driven by AI progress, also saying they have strong momentum with Meta AI, that's the AI chatbot, Llama adoption, as well as their AI-powered glasses. Shares now, though, down about 2.5%. John?
All right, Julia, thank you. And in the meantime,
all right, so Meta and Microsoft. Meta, look, these are decent numbers. What I'm looking at for Meta, it's not horrible. Let me present this right here. But again, just not at the level the street wanted. Revenue 40 billion, EPS 603. Zuck says we also have strong momentum with Meta AI. We had a good quarter driven by AI progress on our apps. We expect fourth quarter 2024 total revenue to be in the range of 45 to 48 billion. And they're not necessarily decreasing their CapEx spend. Full year 2024, yeah, it's up. So instead of 37 to 40, they're saying 38 to 40, which is good for NVIDIA, and still good for the broader AI narrative right now on Meta. Okay, so that's what we got with Meta. Let's take a look back at what's going on with stocks. Robinhood still down 10.10% right here. Meta is kind of flattish. I mean, down 2% is kind of whatever for Meta. It moves like that kind of on a daily basis. eBay's down 9%, DoorDash down 1%. Carvana is the one stock I think all of us needed to buy in January and just go to sleep after we bought it somehow.
One of my closest friends literally got Carvana at the bottom. And it's still
like $4, right?
Yeah.
Okay, MicroStrategy. Let's see what MicroStrategy is trying to do. So first of all, Arnie, your thoughts on MicroStrategy in general and Saylor's strategy. Does it make sense to you?
If there is one company I really can't rationalize is that one. I mean, so I saw the value of it as like an ETF of Bitcoin that is listed as a stock, because that provided essentially an exposure to people that wanted that kind of exposure, but maybe for regulatory concerns, they couldn't have it. So I could see the value in that. And I see the value in having like a corporate structure that potentially could leverage up or leverage down regarding the price of Bitcoin. But the sense of a company per se, just holding Bitcoin, is something that personally I struggle to understand.
Yeah, I mean, I would agree with that. So this is what Saylor says. Now, obviously, what Saylor is doing is very risky, but it's contingent on Bitcoin. But and if it works, then obviously it works. But this is what the press release says. They are our focus remains to increase value generated to shareholders by leveraging the digital transformation of capital. That's Bitcoin. Where's their actual part where they're talking about leverage this 42 billion? So the headline is 42 billion capital plan. The actual, okay, so Q3 2024 was another transformational quarter for MicroStrategy. We raised 2.1 billion in equity and debt. They used that to buy Bitcoin. I think their average now is like 38,000. On August 7, 2024, the company completed a 10-for-1 stock split. At the market equity offering. All right, during the 3 months ended September 30th, the company raised and issued 8 million shares of its Class A stock for 1.1 billion. New at the money market offering. MicroStrategy may issue and sell shares of its Class A common stock having an aggregate offering price of up to 21 billion. So that means he's raising 21 billion via dilution and convertible notes to then be able, obviously, to buy Bitcoin, I would imagine. If Bitcoin goes, right now they have 8 billion of Bitcoin. They're sitting on 8 billion of unrealized gains. If they have 28 billion of Bitcoin, maybe one day they're sitting on 50 billion of unrealized gains. So
I mean, it's literally go hero or go bust.
Yeah, it is absolutely go hero or go bust when it comes to this. Let's get Dan Ives' thought on some of the earnings that we had. I think he'll be talking about Meta, and then we'll keep going from there. Yeah, 21 billion. That is correct. You heard it. It was 21 billion.
Dan, you're sitting on set with me. I'm gonna kick this off with you. 33% growth in Azure, which is what the company had forecasted coming into this, even though street expectations had come down and were lower than that coming into the print. Meta, on the other hand, strong report, but CapEx, is that what's pushing that stock lower right now?
Yeah, so for Microsoft, I'd call these home run quarter. I mean, in terms of Azure, in terms of what we saw in the cloud, fears that you're going to see some sort of slowdown. I mean, obviously, you saw the strong Google numbers last night. Hyperscalers, you're just seeing this accelerate. It's all about the AI revolution. And on that Mount Rushmore, it's not just Jensen, it's Nadella. And I think this is just a huge flex of muscles from Microsoft. When it comes to Meta, stocks had a huge run. To about CapEx, they're going to continue to double down there. I think that is the smart move. Like, I think 24 hours from now, this is a stock that could be up. So I think there's actually the wrong reaction here. We'd be buyers here on Meta, but especially what we see on Microsoft.
Yeah, and I guess that's sort of the point I'm going with, is that expectations were, the bar was low for Microsoft coming to this print, it would seem, and maybe for Meta a little heightened. Rohit, I want to get your thoughts on that, specifically where Meta is concerned.
Yeah, I think the expectations for Meta were high, and they kept going higher. Google reported even before that. I think the high end of guide for Q4, that sets the benchmark for what the 25 growth algorithm could look like. I think what investors were looking for slightly more than that is what I think. For them to get very excited, absolutely nothing wrong with Meta. It is the one to own on weakness, but I think it's just the expectations mismatch between how the stock had run into earnings and what they're guiding towards. So
and you know, that's interesting. That's kind of what happened with Hood, right? Meta, obviously a different company, but expectations were just way different against what the market wanted. And it's a bull market right now, but it's a bull market that will punish you if you don't perform against expectations. We got Brian Armstrong on Coinbase. Stocks down 5%. They also had a double miss. Let's see what he has to say. Oh, press the wrong button. Okay, here we go.
4% right now, but join us in an exclusive interview before the call. Coinbase co-founder and CEO Brian Armstrong. Brian, it's great to have you on the show. Welcome.
Yeah, thanks for having me, Morgan.
All right, so I do want to talk about the quarter because trading volumes fell, though, a little bit better than street expectations. Transaction volumes down 27%. What got my attention particularly here is subscription and services revenue, which was also down 7%, largely due to lower average crypto asset prices. I'm honing in on that because I know that's an area where you're focusing a lot of time and attention as the company looks to build beyond and expand beyond simply just trading activity. So what are you seeing there?
Yeah, well, you're absolutely correct. Our subscription and services revenue has been a way for us to diversify away from transaction fees, which are purely market dependent. It's hard for us to predict what the next quarter of volatility is going to look like, just like it's hard to predict what the S&P 500 is going to do next quarter. Subscription and services still has somewhat market dependent, but it's less so. It's allowed us to make our business a lot more predictable. And I have to say, things are going well in that department. Our subscription and services are on pace to surpass $2 billion in revenue this year. That's up from about 1.4 billion last year. So otherwise, we had a positive quarter of, seventh consecutive quarter of positive adjusted EBITDA, our fourth consecutive quarter of positive net income. So even though the market conditions were a little bit weaker, which is not in our control, I think we've still managed to have a pretty good quarter.
Brian, good to see you again. Give me an update, if you will, about the derivatives platform and how that's trending.
Yeah, well, the derivatives space is really important in crypto. Actually, about 75% of all trading volume in crypto is happening in derivatives now. The take rate or the fees on it are lower than in the spot, but it is the majority of volume. And so we made a big push this year to launch our international derivatives exchange. We also launched a U.S. futures market here in a regulated and trusted way. And when we go talk to the big parties out there that do trading in the derivative space, they all say, we're looking for a trusted, compliant counterparty to do this aspect of our business. And Coinbase consistently comes up as the trusted brand that they want to work with. So we've made a big effort this year, not just launching it, but we've got a lot of new order books live. We're building the features that our customers want around, such as a unified margin, some things like that are helping them get off the ground. So it's still early days on derivatives, but we've made a dent in it. And I think 2025 will probably really hit our stride on the derivative space.
What's interesting to me about your shareholder letter, we're less than a week away from the election. We know crypto is on the ballot. And you call it out here in your shareholder letter and in earnings. And you basically say that this will be the next major milestone in your ongoing work to drive regulatory clarity for crypto. So how are you gaming out election outcomes, and what would you like to see from a regulatory standpoint?
Yeah, well, I'm really proud of where we are from a regulatory point of view as compared to just, say, a year or two ago, when I feel like the crypto industry was under siege and there was just a handful of folks in DC that were really trying to attack the industry. Today, it couldn't be more different. Both presidential candidates are courting the crypto voter. There's about 355 candidates running for federal office in Congress and other areas that have gotten an A or a B score on standwithcrypto.org. They've actually, filled out their position, made it known to the voters. So no matter what happens in this election, it's going to be the most pro-crypto Congress that we've ever had. And I think that just means that the U.S. is more likely to get legislation passed that will allow this industry to flourish, allow investors and consumers to be protected in the United States. And that's really what Coinbase has been advocating for many, many years now. So, it's actually something that we're really proud to have supported these organizations like standwithcrypto.org and Fairshake, which ended up being the largest bipartisan PAC in this election. So I think the crypto voter is really playing a massive role in this election, and we'll get our final results here in a few days.
How much of this hinges on the makeup of Congress versus the outcome for the executive branch? I know you took to X earlier this week and basically said the SEC owes apology to all Americans.
Well, I think regardless of who's elected president here, I suspect the executive branch won't be the blocker to getting legislation passed. The House already passed bipartisan legislation earlier this year with FIT 21. The Senate is now debating that. I think the Senate is really the key next step. We've heard from folks in potential future executive branches. I don't think either of them would veto legislation if it got through the Senate with bipartisan support. So we're hoping that happens here in the lame duck or maybe early next year. But to your question about the SEC, yeah, I mean, I'm not holding my breath on an apology, but I do think it depends who becomes the next SEC chair. And I think it would be an interesting moment of leadership if they did say, look, we didn't make it clear what the rules were in the past. That harmed consumers. We've seen a loss of trust in the SEC as an institution, along with many other institutions in our society, by the way, if you look at the polls. And I think to start to rebuild that trust, we do need to get to a place where the rules are clear and then business can operate here in the United States. This kind of regulation by enforcement attitude has really been harmful to the United States.
And of course, you're engaged in this.
All right, so that's Coinbase. I think Arnie is probably going to have to get out of here soon, folks. So likely just me now. We got the call in about 13 minutes. Let's take a look again at what's going on. So look, here's my thoughts now that I'm condensing some of the Robinhood news as well. And we'll look at some of the other stocks we have going on. So MicroStrategy is still down 5%. Robinhood down 9.2, 25.60. I think for this stock to be down only 5% tomorrow instead of being down back to 23 or 15%, Bitcoin's pumping. Let me see Bitcoin. Is you're going to need an explanation by the street or by Hood during this call for why why their strategy is still working. Now, look, these numbers, 35% growth, is not saying their strategy is not working. It's just not working at the level the street want. I mean, if the expectations were 620 million and Robinhood at 637, you have a 20 million beat. And then, people are excited. But the expectation is 650, you're at 637, this 13 million miss, which doesn't, I think, create a bad quarter, but it creates a bad taste in the street's mouth in terms of how they were interpreting the company. So I think if they can reset those expectations in the call, that's going to be important. Another thing is Bitcoin right here. I mean, look, at the end of the day, I don't know if Bitcoin gets to the 80 to 90, 100,000 levels that people think by the end of the year that's possible. But if it does, or even in January, February, that likely will get retail to come back in and start buying. That's obviously good for Robinhood. But Bitcoin is not the full thesis with Robinhood, but it can help, even if they, didn't have the best quarter in the eyes of what the street was looking like. Bitcoin right here at 72,000 right now, 72,723. We did hit close to all-time highs yesterday at 73,500. Is this a buy the dip on Hood? I mean, it's hard to say right now. Obviously, my answer is yes, because if I liked it at 27, I like it at 25. I don't think anything changed in terms of thesis. However, I don't know how the street reacts tomorrow. If the street's upset after this call, maybe there's a shot to get it at 22, 23. I mean, really, a lot of this stuff is going to be contingent on this call, which will start in 10 minutes. And we're going to see what it looks like. Riot is down 16%. Okay, so Riot is a Bitcoin miner. Riot's down 11%. 937. Again, the miners have not had a friendly past couple months, given Bitcoin hasn't really exploded, which is what the miners need. CleanSpark is up 1.24%, even though Riot's down. Looks like Riot's earnings were a double miss as well, which was not the best. SMCI. So for those that didn't see the SMCI news today as well, I didn't see how they ended the day. SMCI ended, down 32%. Their Ernst & Young public accounting firm left, and they wrote a written statement saying, we cannot stand by the results of SMCI. We don't just trust them. And it's kind of crazy because these big four accounting firms don't just leave a public company as one of their major clients, which means something is going wrong with SMCI. And that also messed up NVIDIA a little bit. NVIDIA down about 1.36% on the day on that news. AMD ended out the day down 10.6%. So AMD's quarter as well, not the best for what the street expected. So remember, Robinhood doesn't give earnings. Robinhood does not give, guidance. They don't give guidance. So you're not going to see guidance for Q4. We will get October numbers, which means this month's numbers in terms of deposits, trading volumes, etc., in like a week. So we will know how October went. And I think that's when the stock's really going to react. Because let's say October was a phenomenal month. Street's probably going to get excited for that because they see like a bull run coming into November, December. We got the election to deal with, all that stuff, right? But if October was a crappy month, which we'll find out a little bit on the call because they tend to give a little bit of guidance for the next month on the call, then the street might take it down even more because they're like, all right, September sucked. October's not getting any better. This is like, what are we supposed to do here? And so that's another thing I think that, the street's probably going to think about when we get into this call. Starbucks misses but doesn't drop. Okay, yeah, let me get those numbers. Carvana's the winner of today, folks. Carvana up 22%, which is just incredible. So that one really is the winner. Starbucks, let me try to get their exact numbers right here. SBUX, and then I'll try to get the other couple numbers as well for Etsy. Starbucks, let's see. Again, they had that preliminary, well, we already know their numbers, right? Because they gave that preliminary results. And they kind of already said what they were going to do. So revenue, 9.07 billion. They missed by 3%. EPS, 80 cents. They missed by 21%. Street doesn't care because they already knew this. They already knew this 2 days ago. So that's why the Street has no issue from that perspective. Etsy, let's try to get their numbers. Etsy, well, let me see if I have it here. On Etsy, and we'll see what they're, and then we have a couple others besides Etsy as well. Okay, we'll do DoorDash and Etsy together. So let's do a couple of those. All right, so here's actually eBay, Etsy, DoorDash. All right, so let's look at this and then we'll keep going. We have a Robinhood call in about 7 minutes. Palantir after hours. Let me just take a look at them, see how this volatility is affecting them. Palantir is at 42.89. Palantir is down 1.9%. Okay, so interesting. Not sure why Palantir is dropping. Maybe Meta and Microsoft is making Palantir go down. Microsoft right here is 435. Microsoft's barely up. Meta's barely down. Palantir is getting the brunt of it. Now, look, Robinhood missed slightly on their expectations and they got hit. Palantir and Robinhood was up a lot, right? Robinhood was up almost 130% going into this. Palantir is up about 150% going into their earnings next week. I don't think Palantir is going to miss on the top or the bottom, but if they beat, but it's not a big enough beat, which could have happened to Robinhood as well. Robinhood could have beat it, but they maybe wouldn't beat as much as the Street wanted. We're seeing what happens in the market, right? Where these stocks are getting punished, given the market's at all-time highs. So it's one of those things that we have to pay attention to as we get into earnings for Palantir as well.
That stock is down about 10% here. Now, Q3 results did beat estimates, coming in at 119 adjusted on EPS. That beat by a penny. Revenues of 2.58 billion. That was also a beat, but it really seems to be this weak guidance that is weighing on the stock here. Both Q4 revenue and Q4 EPS coming up short of expectations. Now, moving over to Etsy, because that stock is up 13% here. It was a mixed quarter, EPS of 45 cents. That was an 8-cent miss, but revenue at 662.4 million did beat estimates. And Etsy also announced an additional $1 billion buyback program. And that stock now up more than 11%. Morgan?
All right, Pippa Stevens, thank you. Coming up next, an exclusive interview with Coinbase co-founder and CEO Brian Armstrong with his first...
Okay, so that's what we had with Etsy and eBay. Both two consumer companies. Palantir now down 2.2%. I know it's only down 2%, but Palantir was down 2.7% in the morning, so now it's down 5% for the day. I don't know why it's down, quite frankly. Maybe the market's getting a little scared based on some of the other reactions they're seeing, and they're like, hey, if Palantir has a double miss, then it's going to be really bad. I don't know. I don't see any news after hours for Palantir. Maybe Microsoft said something in their call, potentially, that the Street's interpreting. Let me get Microsoft's exact numbers as well. We got 6 minutes left till hood. Let's see what Microsoft said as well. Bitcoin is going up right now. Yes, Bitcoin's trying to get to that all-time high level, which is psychologically going to be very important. All right, so here is Microsoft, which really has a muted reaction after hours. Revenue was 65.6 billion, increased 16%. Operating income 30 billion, net income 24 billion. Diluted earnings per share was 330. AI-driven transformation is changing work, artifacts, and workflow across every role, function, and business process. We are expanding our opportunity and winning new customers as we help them apply our AI platforms and tools to drive new growth and operating leverage. Strong execution by our sales teams and partners delivered a solid start to our fiscal year with Microsoft Cloud revenue of 38.9 billion. That's up 22%. I think the Street wanted 21%, so that's a beat. And Google at 35%, which is incredible. Google's base is smaller, but still not bad growth. 365 products up 13%. LinkedIn revenue up 10%. Intelligent Cloud 24 billion. Search and advertising up 18%, Xbox up 61%. Microsoft bought $9 billion worth of shares and dividends, or returned with dividends and share buybacks in the latest quarter. There's no comment here on Copilot. That's a big thing. Or sorry, agents. They're talking a lot about that. Yeah, agents is not in the press release. When Mark Benioff releases his press release, every other word is going to be agent. So we're going to see some agents pretty soon. But yeah, nothing about Copilot growth or agents on this. We'll have to listen to the call to see kind of what they're saying about that. Palantir's down 3% after hours. Yeah, not sure. Not sure why they are down 3%. Again, look, this is one of those things with Palantir here, right? Which is Street just might be thinking that it's they're afraid of a lot of these other companies that are missing right now, and Palantir could be another one of them, but I think it has more to do with Microsoft and Meta, given the AI thematic kind of fits them. Robinhood right here at 26.20. So the low on Robinhood was 22.98 today. Now it's at 26.26. It's down 7%. You're getting somewhat of a recovery, but really this call is going to determine how much of a recovery Robinhood continues to maintain. Hood is eligible for the S&P 500. Correct. Hood is eligible for the S&P 500 next year. Hopefully that happens. That would be amazing, but they're not going to know about that until at least another 6 months to see if that happens. Okay, so let me pull up the earnings webcast. It should be starting in about 3 minutes. Yeah, it should be starting about 3 minutes, and then we will listen into the call. It's a pretty nice recovery right now. Correct. It's a pretty nice recovery. Again, after hours, it's hard to trust it, right? What happens, because when the market opens tomorrow, we are really going to get a taste of how the street thinks of Robinhood and these earnings. And whatever Vlad says on this call is probably going to determine that as well. MicroStrategy as well got a decent recovery, 216 back to 238. Look at that. I still believe it's a pretty strong market with not a recession coming up. Can a recession happen? Sure. But in the next 2 months, I think it's a little unlikely given the jobs report we saw today, GDP growth that we saw. All of that being said, markets are at an all-time high. So you're balancing the fact that markets can go higher if companies produce results, which in Q3 they have produced results, with also the fear that people have around markets potentially being too high and wanting to take profits if companies don't produce the best results, which is fair. I think that's rational to see that happening. MicroStrategy down 3%. Is Bitcoin contributing to that? Bitcoin's really trying to get back to 73. We touched 73 for a little bit yesterday. Right now it's 72,768. Where are the other crypto stocks? Let's take a look at that. Bitfarms is flat. MicroStrategy again down 3%. Cypher's down 1%. Iren is up a little bit after hours. Marathon's up 1%. Interesting. Marathon and CleanSpark are up, but Riot's down. So this is a Riot specific issue. There's an issue going on there. Palantir is below 42. Again, guys, I have no idea. Well, it's not below 42. It's at 42, 41. It's below 43, but I don't know. Honestly, I don't know. If I knew, I would tell you guys, but nothing I'm seeing on my side. Other than, again, we got to remember the stock's up a lot. And when stocks are up a lot, they tend, consolidation is not the worst thing in the world. It's likely healthy to see that happening. I just don't know the reason why it's happening. But it's one of those things where, again, even as a Robinhood shareholder, I can't be greedy as well, right? The stock's up a lot year to date, so I can't be greedy that it's down 10% after being up 130%. Same thing with Palantir. Palantir down 7%. You can't be that greedy given it's up more than 150% at this point as well. Okay, so let me pull up the Hood call. And then we should be getting into it in like 30 seconds. And we'll see what they have to say. All right, here we go. Let's see. Should be starting pretty soon. Again, should be starting in... There you go. All right. Oh, wait. No, not yet. Should be soon. Coin is back to pre-markets now. LOL, that is crazy. Yeah, Coinbase recovering a little bit as well. Palantir still down. I don't know on insider sales. Let me check that. I have to check that out. I'll check that out as the call is playing, and then I'll put in the comments what I see from the insider selling on Palantir. Bitcoin needs to get above 73,600. I mean, that would help. Bitcoin above 73,600. It would be close to all-time highs at 73.7, which would be important. A lot of SEC filings for Palantir. Okay, that's probably why it's down. I'll check that out. As soon as the call is playing, I will check that out. And so those SEC filings are probably the reason why it's down. All right, here we go.
Thank you for standing by. My name is Catherine, and I will be your conference operator today. At this time, I would like to welcome everyone to the Robinhood third quarter 2024 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remark, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. We ask that you please limit your questions to 1 and re-enter the queue for any additional questions that you may have. Thank you. I will now like to turn the call over to Chris Cagle, Vice President of Corporate FP&A and Investor Relations. Please go ahead.
Thank you, Catherine, and thank you to everyone for joining Robinhood's Q3 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP measures we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks, Chris. Hi, everyone. Let me start by reiterating Robinhood's 3 areas of focus. Number 1, winning the active trader market. Number 2, increasing wallet share with our customers. And number 3, expanding internationally. In Q3, we continued to make progress on all of these fronts. In fact, our results after the first 3 quarters of the year have already broken through a number of full-year records. And we have another quarter in front of us to take these results even higher. Just to share a few examples. First, Q3 net deposits were $10 billion or more for the 3rd straight quarter as we continue to increase wallet share. This brings us to $34 billion year to date, above our 2020 record of $31 billion, and also takes our customer assets under custody to a record high of $152 billion. Second, Q3 options contracts were up 47% year over year to a new record as we keep winning with active traders. This brings our year-to-date total to 1.2 billion contracts, edging out our full-year high from 2021. And third, Q3 was another strong financial quarter with our 2nd highest revenues ever. Revenues grew 36% year over year. Adjusted EBITDA increased 96% from a year ago. Looking year to date, revenues of nearly $2 billion have already broken last year's record of $1.9 billion, and GAAP diluted EPS of 55 cents is multiples of any prior year. It's energizing to see our business performing well like this, but we're even more excited about our product roadmap. A key part of increasing wallet share with customers is growing Robinhood Gold subscriptions, which hit an all-time high of 2.2 million in Q3. And one of the most exciting new parts of the Gold program is our Robinhood Gold Card. When I've talked to Robinhood customers in recent months, the Gold Card almost always comes up. If someone has it, they love it. If they don't have it, they want to know when they're going to get it. And I hear you. We're working hard to increase the rollout, but we're also being patient and carefully studying customer behavior as we grow so that we manage credit risk to profitably scale over time. While it's still early, I wanted to share some emerging data from our 100,000 Gold Card customers. First, customers love the Gold Card. App Store ratings continue to be 5 out of 5 with over 10,000 5-star reviews. Customers tell us they love the metal card, the digital app, and of course, the 3% rewards. Second, the early customer behavior is in line with our expectations. It looks like the Gold Card is top of wallet for most customers, and early data shows that we're retaining approximately 95% of Gold Card customers following their first transaction. We're also starting to see customer spending grow and loan balances revolve as expected. Third, Gold Card customers are also contributing meaningfully higher net deposits versus similar customers. It's great to see the early additional benefits to the platform. All in all, while it's still quite early, we're further increasing confidence that we can scale the Gold Card significantly over time. Now let me turn it over to Jason to review our financial results, and then I'll offer some additional thoughts.
Thanks, Vlad, and thanks everyone for joining us today. In Q3, we had another strong quarter, growing revenues 36% and driving 77% incremental adjusted EBITDA margins versus a year ago. Q3 business results also set a number of new highs, including assets under custody, options contracts, cash sweep balances, and retirement AUC, as well as multi-year highs for equity volumes and margin balances. And as we enter 2024 focused on driving another year of profitable growth, we're excited that we've already broken records for full year revenue, adjusted EBITDA, and earnings per share. Looking at the progress we made in Q3 versus a year ago, assets under custody grew 76% to a record $152 billion. Net deposits were $10 billion plus for the third straight quarter and $39 billion over the past year. This translates to annualized net deposit growth rates of 29% in Q3 and 45% over the past year. Total net revenues grew 36% to $637 million. Adjusted EBITDA nearly doubled to $268 million. Adjusted EBITDA margins expanded by 13 points to 42%, and net income grew to $150 million, or 17 cents per share. This was reduced by 1 cent for a regulatory accrual in the quarter. We're pleased with these results, which mark our fourth straight quarter of GAAP profitability and ninth straight quarter of positive adjusted EBITDA. Now let's look more closely at Q3 revenues, which increased year over year across all three categories. Transaction-based revenues grew 72% as we drove higher volumes and market share gains across all trading products. It was great to see option, equity, and crypto volumes up 47%, 65%, and over 100% from a year ago, respectively. Net interest revenues increased 9% as we grew interest-earning assets and securities lending activity improved. This included customers growing their cash sweep balances 80% year over year and margin balances building to a two-year high. Lastly, other revenues grew by 42% as we added over 850,000 gold subscribers in the past year to reach a record 2.2 million subscribers and record annualized recurring gold subscription revenue of over $110 million. I'd also note that our Q3 revenues include the impact of contra revenues from amortizing matches on customer deposits and transfers. Q3 contra revenues were $27 million, up $14 million sequentially, mostly driven by the 1% gold deposit boost. We expect contra revenues to grow sequentially by a similar amount in Q4 and then grow much slower in 2025. To provide some more context, customers love the matches we provide on asset transfers and IRA contributions, and we're seeing great payback periods on these matches. At the same time, the 1% gold deposit boost has not driven as much incremental customer activity as our other promotions. So we've decided to wind it down in November to focus on offers that resonate more with customers. As an example, we doubled down recently for our Hood Week promotion by offering a range of matches on asset transfers. And in just 2 weeks, this led to $2 billion of transfers in from brokerage incumbents that averaged over $130,000 per customer. Stepping back, when we reflect on our revenue so far this year, it feels good that our last 3 quarters are the 3 highest in company history. Turning to Q3 expenses, we had another good quarter of expense discipline. Combined adjusted OpEx and SBC was $476 million in Q3, in the middle of our 24 outlook range on a quarterly basis. Looking ahead to Q4, we're pleased that we're still on track for our full year outlook range of $1.85 to $1.95 billion of adjusted OpEx and SBC, even while driving nearly 40% year-over-year revenue growth for the first 3 quarters of the year. We anticipate we'll likely finish near the top end of that range, given our continued growth investments to finish the year strong. Turning to capital management, we started our $1 billion share repurchase program in July. We allocated $97 million to repurchase 5 million shares in Q3 and made good initial progress on our expected 2 to 3 year total timeline. We love deploying capital like this. It lowers our share count and positions us to increase EPS and free cash flow per share over time. And when we look at last year's share repurchase, plus the start of our new program, we've deployed over $700 million to repurchase approximately 60 million of our shares, equivalent to about 7% of our current diluted count. And we're continuing to repurchase shares daily in Q4. Before passing it back to Vlad, I'd like to comment on the strong momentum we are seeing so far in October. Net deposits are north of $4 billion, and cash sweep balances are more than $25 billion. As for trading, equity notional volumes highest month in over 3 years. Option contracts look to be one of the highest months ever, and crypto notional volumes are over $5 billion, on track to exceed the Q3 monthly average. I'd also highlight that our crypto rebates have increased to 48 basis points in October, relative to our 44 basis point average in Q3 and 35 basis points at the start of the year strong. Longer term, we're energized by the progress we're making and believe we are well positioned to drive higher earnings and free cash flow per share over time, driven by our 20% plus net deposit growth, diversified business model, and 90% fixed cost base. With that, I'll turn the call back to Vlad.
Thanks, Jason. Now I want to highlight our progress on the first part of our strategy, winning with active traders. 2 weeks ago, we held our inaugural Hood Summit in Miami. It was really awesome to have over 400 active trader customers together for a few days, and we introduced 3 exciting new products. First, we announced index options, which are one of the fastest growing retail products and make up nearly 10% of US retail options contracts. Our customers have been trading them on other platforms to date, so they're excited to bring their trades to Robinhood and leverage our industry-leading pricing, and we're excited to expand our addressable market. Second, we announced futures. Here, we're not only offering industry-leading pricing, but also a great customer experience with our awesome futures ladder. We continue to believe that futures can be a 9-figure revenue business for us over time. Also, building out the infrastructure behind futures has also enabled us to offer event contracts, including our new presidential election market that we launched. It was great to see customers quickly engage with this new product, trading over 10 million contracts in the first full day, and on track to more than double that today. Third, we launched Robinhood Legend, our new state-of-the-art desktop platform, which we built from the bottom up for active traders. It's clear from customer feedback that Legend is really resonating, so we're doubling down in this new domain. The team is hard at work to rapidly ship more functionality for customers. As additional context, while we are number 1 in mobile trading, that's only half the retail trading market today. The other half is on web, where we haven't meaningfully competed in the past. So launching Legend is doubling our addressable market. We have a lot of momentum in our active trader offering as we close out the year. As I said earlier, Q3 option volumes were up 47% year over year to a new record. And Q3 equity volumes also increased, up 65% year over year to a 3-year high. And this is even before the full rollout of index options, futures, and Robinhood Legend. In closing, we had another strong quarter in Q3, and you should know our team continues to work incredibly hard to deliver even more value to our customers. The roadmap is full, there's so much to do, and we're excited to share a lot more with you at our Investor Day in December. Now, let's move to questions.
Thank you, Vlad. For the Q&A session, we'll start by answering the top few shareholder questions from Say Technologies, ranked by number of votes. We passed over questions that we already addressed on this call or in prior quarters, and grouped together questions that shared a common theme. After the Say questions, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say, which is for Vlad. Vlad, when will the Robinhood Gold Card be available to all users?
Yeah, thank you for the question. I think that the first thing I want to say is we've really been humbled by the demand we've seen so far for the Gold credit card. The wait list is close to 2 million, and so far we've rolled it out to about 100,000 customers. And I think if you compare this to how other successful credit card programs that are new have scaled, that's a pretty quick ramp. But of course, we also recognize it's small compared to the wait list. The wait list, frankly, exceeded our expectations, and we're working as hard as we can to get it out as quickly as we can. but it's also important for us to make sure we don't incur significant near-term losses. So we have to understand the customer behavior and the economics, because the credit card business can get quite big, and also if we're not careful, that could mean losses. So as I mentioned earlier, we like the behavior we're seeing, and if the behavior we're seeing continues in this way, over the next year, we expect to roll the card out to multiples of where we are today.
Right. Thank you, Vlad. The next question is also for you, and it asks, are there any plans to introduce a way to send or receive money to other Robinhood users via the Robinhood ecosystem?
Yeah, we've actually experimented with this in the past when we rolled out Robinhood Spending and the Robinhood Cash Card a couple of years ago. Now, right now, the focus is really on the credit card offering. We're seeing amazing feedback and strong demand for that. So we're focusing on making sure we scale that. But we do anticipate growing our offerings so that anything that you can do on another consumer finance app or product can be done on Robinhood as well. So this is certainly something that we're thinking about.
All right. The third question is also on Robinhood Gold. So rate cuts make Robinhood Gold worse each time. How will Gold continue to add value to users, and what new benefits is Robinhood planning to add for Gold users? Also for Vlad.
Yeah, so the strategy with Gold is to deliver an offering that provides customers with exceptional value in every market environment. Regardless of whether the rates are increasing or decreasing, you should be able to get tremendous value from Robinhood Gold. Now, some of the value props naturally do well in an increasing rate environment. Cash sweep with high APY is one of them. Other products tend to be more attractive in declining rate environments. And as a matter of fact, at Hood Summit, we recently announced that Gold customers will receive differentiated, better pricing on a few of the products we announced. So the pricing, while industry leading across the board, is even better on index options and futures for our Gold subscribers. So while rates on sweeps may be coming down because of Fed cuts, we're going to keep investing in Gold. And for every new product we launch, we ask ourselves, how can we make it even better for our Gold subscribers? And as you see, as we continue to roll out new products, Gold should get even better and better.
Great. Thank you, Vlad. And the last question is for you, Jason. Jason, can you describe the plans for the live tax gain and loss monitoring that you're rolling out?
Sure. There's a couple things I'd highlight on tax management. First of all, we recognize it's really important for customers. Just yesterday, we announced a realized P&L tool shipped. So that one's live for customers now. And we also know that tax lot selection in the app is important for customers. And I'm excited to tell you that we have employee beta testing going on right now for tax lots, and the team is pushing hard to get it in the hands of customers really soon.
Great.
We think it's really good. Yeah, I think you're going to like it.
All right. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking the time to ask these questions of Vlad and Jason, and look forward to more next quarter. So now I'll turn the call over to Catherine to lead Q&A from our analysts.
At this time, I would like to remind everyone, in order to ask a question, press star then the number 1 on your telephone keypad. We ask that you please limit your questions to one and re-enter the queue for any additional questions you may have. Your first question comes from the line of Craig Siegenthaler with Bank of America. Please go ahead.
Good afternoon, everyone. Hope everyone's doing well. First, we want to congratulate you on the Legend launch. And I saw there were, I think, 1,000 signups in the first 40 seconds, Vlad, post the launch. But what is the level of signups to date? And how many of them are incremental signups to the 24.4 million accounts that are Robinhood as of September 30th?
Yeah, I mean, we are still, the product is not quite ungated in the sense that anyone can just access it. So we've been rolling out to multiples of that number, but haven't yet sort of like opened it up to everyone. Early feedback is extremely positive. I mean, I don't. You guys probably see the level of live streamers and folks on social media has been tremendous, and the team is, I'd say, even more motivated to keep the momentum and make sure the product is better and better, because we really feel like we've got something great here.
Is it just me, or do you got?
Our
next
next question
question.
comes from the line of Dan Dolev with Mizuho. Please go ahead.
Hey, Vlad. Hey, guys. Great results again. Very proud of you.
Thanks,
I was
Dan.
very intrigued. You got it. Yeah, of course. Well deserved. I was very intrigued with the presidential election market, and I wanted to know, it's got a lot of press and we've been getting a lot of questions on it. So can you give us some color on how it's doing, how creative it is to overall retention? Anything you can tell us about it would be great. Thank you.
Yeah. So first off, we just rolled out to 100% of customers after starting the rollout just this Monday. So huge kudos to the team for that. The path to offer this product was paved really less than 30 days ago, and we really moved quickly to make it available to customers ahead of the election. So to give a little bit of context around this, one of our focus areas is to win the active trader market. And I think really to do that, our approach is that if you're an active trader, using Robinhood should put you in a position, you should really associate Robinhood with being at the forefront of technology and innovation and trading. And I think offering products like these, which you can't really find at many of our competitors, is the best way to do that. So feedback is really, really good. You can see on social that it's resonating with customers very, very clearly. But we rolled out to 100% right before the call started. So I think it's a little bit early to tell, to give you too much. Other than, yesterday we did about 10 million contracts. That was pre-full rollout. And we've done even more than that already today. Thanks.
Your next
We can
question
take the
comes
next
from
one.
the line- Yep. Okay. Your next question comes from the line of Patrick Moley with Piper Sandler. Please go ahead.
Yes, good afternoon. Thanks for taking the question. I just had one on index options and futures trading. Now that you've announced the pricing on those products, I was hoping you could help us better understand the economics there. I know index options carry a relatively high exchange fee. So what do your margins look like in offering those contracts? How much do you expect to make per contract? And then maybe as part of that, your expectation for how much volume is going to come from gold versus non-gold members. And then if I could add a follow-on modeling question, it looks like your equity fee capture declined by about 20% sequentially. So any color there on what drove that would be helpful. Thanks.
Sure, Patrick. I'll go ahead and take both of those. This is Jason. Kind of just going index options first, the non-gold price will be kind of industry leading at 50 cents per contract, and the gold price will be even better at 35 cents per contract. Cash settled index options, as you know, is a really fast growing segment within options. And so we see this as a big opportunity for us to take market share even faster. As context, we have been taking, double digit market share for some time now, and that's without having this hotter segment offer. Also on fees, like exchange fees, we'll be passing those through to the customers. On futures, non-gold 75 cents per contract, and gold gets an even better deal at 50 cents per contract. We've said that futures over time, based on volumes we've seen at our competitors, we think it could be a 9-figure business for us. So big opportunity for us. The second part of your question was equity take rates. There's really two things that affect our take rate on equity. The first is volatility, and the second is mix. And what we saw in the quarter was just customers buying more kind of larger, more liquid names.
Bro,
Your
the
next
moderator
question comes from
sucks.
the line of Brian Bedell with Deutsche Bank. Please go ahead.
Great. Good evening, folks. Thanks for taking my question. Maybe just on the cadence of customer pickup as we move into 4Q, just on futures and index contracts in terms of what portion of the user base have you rolled the futures out to so far, and what are the rough plans in doing that for the rest of the quarter, and then same on the index options timing of when you expect to roll that. And if I could just sneak one more in on desktop users, good to hear the great feedback. Any observation yet on increased velocity from the folks that are using it so far?
Yeah, I would say that the folks that use the Robinhood Legend product tend to be among our most active. So the velocity is quite high. That being said, we rolled it out to 1,000 people during the Robinhood Legend keynote, and it was the first 1,000 people that sort of like signed into their Robinhood accounts on desktop. And I think we filled the 1,000 slots in 45 seconds. So those customers were very keen and engaged to try the product. Early feedback is very positive, and I think it's really important to establish a great reputation among active traders because they're networked in a way. They talk to each other, they listen to other active traders, and what we've been seeing is really positive signs from the community about Robinhood Legend. But that said, it's not rolled out fully yet, so we don't have like the perfect picture of what it's going to look like at 100%. But so far, we really like what we're seeing.
Timing on futures and index options.
Yeah, timing on index options and futures. So the first Robinhood derivatives product that rolled out is our presidential election market. Futures outrights will probably be rolled out in the coming months. But right now, the focus of the futures business is really in just making sure everything goes as smoothly as possible for the election next week. And then, of course, rolling out outrights is a top priority. Index options as well coming in the coming months.
Your next question comes from the line of Devin Ryan with Citizens JMP. Please go ahead.
Great. Hi, Vlad. Hi, Jason. How are you?
Great.
Want to ask a question just on interest rate sensitivity. So, obviously, we saw the first 50 basis points in Fed cuts. Last quarter, I think you talked about 25 basis points as a $40 million impact. And that was just essentially the simple math off of balances at the time. And didn't take into consideration potential for accelerating margin utilization or higher sec lending activity or higher transaction activity, which often happens as rates come down. So just love to get a sense of whether you're seeing or expecting to see kind of an acceleration in margin, how you would frame the upside in sec lending. It seems like we're operating at a depressed level. Do you see a lot of upside in a more normal environment? And then are there any other kind of offsetting forces just we should be thinking about, beyond just the simple math of, a rate times the balance? Thanks.
Yeah, you bet. And the rate times the balance again this quarter would be, roughly 40 million for each rate cut. On margin, we've been seeing really nice growth in margin balances following the reduction of rates for customers. That's continued into October, so that's been moving up. We'll share that number with you here in a couple of weeks. In terms of sec lending, a couple of dynamics going on there. First, on just the business inputs themselves, we had about 400,000 additional customers join the program this year and several billion in equities added to the program, which is great for the long-term viability of that program. At the same time, we saw rates on specials that we get, hard to borrows, come down a bit versus Q2, and I think that's really what you're seeing. But in terms of the underlying business drivers, we feel really good about that. And then lastly, we've talked about for some time about how we think we have a naturally hedged business model that as rates come down, we see interest rates turn into a tailwind for the business around growth. I think you've already started to see some of that with the trading activity. Options at an all-time high in Q3, equities hitting a multi-year high. I'm feeling even more confident about the tailwinds that come from falling rates, and we'll just have to see how it plays out from here.
Your next question comes from the line of Benjamin Budish with Barclays. Please go ahead. You might be on mute, Benjamin.
Hi, sorry, this is Ben. Can you hear me?
Yes, we can hear you now.
Hey, sorry about that. I had the phone stuck on mute. Well, thank you for taking the question. I was wondering if you could talk kind of generally about your path to product kind of innovation and launch. It looks like with the active trader offering, the credit card, you're being very kind of cautious and measured in terms of the rollout. How should we read that into future product development? I think we're all expecting a lot to be announced at the December Investor Day. You've talked about broader ambitions in crypto, global kind of brokerage offerings. So yeah, could you talk about sort of your approach to like product velocity and how we should think about the pace of rollout for current and future product launches? Thank you.
Yeah, I think that it really depends on the product we're talking about. For example, just this week with presidential election market, we started the rollout on Monday and completed it on Wednesday, which is very quick, particularly for a new product. Credit card is a little bit of a different animal. Nothing technological is preventing us from rolling that out. It's just really looking at other successful credit card programs in the past and making sure that, with a wait list of 2 million customers, that business could get quite big. But if we don't manage it carefully, like losses could get big as well. So to avoid that, we want to make sure we prudently scale it. And so far, we've onboarded about 100,000 customers who love it, and early signs are good. And that's roughly in line with how fast other successful card programs have scaled in kind of like the first year of operations. So that one, it's just us making sure that we're understanding customer behavior, understanding credit, since that's a new business for us, and we're feeling good. But yeah, we recognize the demand is extreme, so we're working to onboard people as quickly as possible, and we expect to get to multiples of our current level over the next year.
Your next question comes from the line of John Todaro with Needham & Company. Please go ahead.
Hey, Vlad, Jason, thanks for taking the question. I guess just going back to the futures index offerings, any expenses down the road that we should be thinking about increasing on the back of that? I don't recall if we got to kind of that margin of where it should shake out. And then also just what drove the crypto rebates higher to 48 basis points?
Yeah, I'll go ahead and take both of those. So first on the crypto rebates, we've been experimenting for some time on crypto rebates, and we've been seeing the rebate rate come up. We always want to have great prices for customers, but also balance the return that we generate for shareholders on that activity. And so we started the year at about 35 basis points, and you've seen it move up, including in October, where we're running at 48 basis points. In terms of futures and index options, those products really benefit from the broader kind of technology structure that we have at the company. We have a roughly 90% fixed cost base and relatively low variable costs, and futures and index options benefit from that as well, which leads to really high incremental margins as we grow those businesses.
Your next question comes from the line of Steven Chubak with Wolf Advisor. Please go ahead.
Hi, good evening.
Hey, Steven.
So
Hey, Steven.
I wanted to start off with a question on actually a chart that you had included in a recent presentation deck, just showing the strong relationship between revenues and AUC. It's been a persistent trend over the last few quarters. I mean, in this particular quarter, we did see some decoupling amid some of the rate cuts and subdued trading activity. And we're just hoping you could speak to your confidence level that that relationship should ultimately still hold, even amid the impact of further rate cuts from the Fed.
Yeah, I feel really good about that relationship, Stephen. I mean, one way to think about it is just bridging revenue from Q2 to Q3. There's really two things that distinguish our second quarter and our third quarter. The first is in the second quarter, we have seasonally high proxy revenue. That was about $30 million, and you saw that reduction in Q3 as we moved past that seasonal quarter. The second bridge item from Q2 to Q3 is the contra revenues on the match promotions. And in the quarter, we saw a step up to $27 million. That was an increase of about $14 million in contra revenues versus Q2, and I think that's showing up in the relationship that you're drawing to AUC. Importantly, most of the incremental $14 million related to the 1% boost on gold deposits, and that's something that we're winding down in November. So as we look forward to Q4, we expect Q4 to step up contra revenues in a similar amount that we saw from Q2 to Q3, but then subside and grow at a slower rate. Zooming out, feel really good longer term, about the core business.
Your next question comes from the line of Andrew Steen with FT Partners. Please go ahead.
Hi, thanks for taking the question. Just wondering, could you discuss the deposit trends for some of the recent promotional offers, and then what's your strategy for deposit bonuses going forward? Thank you.
Yeah, we love the matches on deposits. We've seen customers really respond to it. From a finance perspective, we track the behavior of the cohorts and dollars that come in, and we've seen, like, for example, the 2023 match promotions have already paid off. The payback periods are around 1 year for 1% and kind of in the 2 to 3 year zone, trending more towards 3 years on the retirement matches that are 3%. So we feel really, really good about that. It's our third straight quarter of $10 billion plus in net deposits from our customers, and continuing with a longer term trend of 20% plus growth. The Hood Week promotions that we did brought in $2 billion. So that was a 2-week promotion, and really, really strong response from customers. And in addition to the relatively quick payback periods, we just love the potential for compounding effects for the business over time.
Your last question comes from the line of Ken Worthington with JP Morgan. Please go ahead.
Hi, this is Madeline Daleiden on for Ken. Thanks for taking our question. You discussed it a bit already, but we wanted to dig a little more into the strategy around the election-related event contracts. So could you walk us through your ultimate decision to list these event contracts, how they fit into the product roadmap, and ultimately is Robinhood considering getting bigger into these more betting type products? Thank you.
Yeah, I'd say overall, as a philosophy, we want to make all product categories available for customers over time, particularly for active traders. We want Robinhood to be associated with sort of being at the frontier of innovation and technology in financial services. So if you look specifically at these event contracts, the regulated swaps markets that really serve as legitimate hedging instruments for large institutions. And we believe that if any tool or any instrument is available for institutions, then we have to make it available for retail as well. I think a nice other secondary impact is it provides people with a reliable data source about where people predict the market will land.
This concludes our Q&A session. I will now turn the call back over to Vlad Tenev, Chairman and CEO, for closing remarks.
Yeah, thank you. Thank you to everyone for listening, and to our institutional and retail analysts for continuing to engage. And really a special thank you to all the folks on social media who've been posting content and streaming using Robinhood Legend and sharing feedback. We really appreciate it.
Ladies and gentlemen, that concludes today's call. Thank you all for joining.
Okay, that is now done. We got a lot to talk about, a lot to discuss. We'll look at some of the other companies that are going on as well, but let's break down what we got on Robinhood. Yeah, Vlad took a shot at me at the end because I'm not using Legend to stream. Okay, look, let's start off with objectively about the call. Call sucked. Very bad call. Not a good call. First of all, the logistics of this call, I don't know who the hell they hired as the moderator. I don't know how there was such a disconnect. I mean, after the first question, there was a good 30 seconds of a wait. And I know these calls tend to be awkward, but the last two calls were perfect. I mean, in terms of just like the energy, the excitement, and the moderation of it. This one was very weird. So this one, not the most exciting call. Number two, in general, energy was down. Energy was definitely down, and that's okay. And I think, this is the part about being an investor, but also these are humans, right? Vlad and Jason Warnick, the CFO, he's a human. Vlad's a human. They probably looked at the stock for the first hour before they went live, and they saw that the street wasn't happy. And so in general, the momentum and excitement, it's hard to put that up after your stock's down almost 20%. But you've got to put on a good face. And you could just tell the energy was not the best, even though I still think this quarter was very good. And I'm going to talk about the good things we got from the call. But energy just wasn't the best. And I think that's fair. I mean, look, I've been critical of other CEOs when the energy is not there. I'll be critical right here. Energy. And look, Vlad's energy was like, he sounded excited about their progress. But you could tell that there was a certain level of lack of enthusiasm in regards to the future of what they're doing. And here's how I can quantify that or give a warrant for that claim I'm making. There was very little guidance for Q4. And Robinhood doesn't give guidance. So I wasn't expecting guidance, but usually they tend to say how the first month of the sequential quarter is going. At the very end, we got Jason Warnick, the CFO, saying that they got $2 billion of deposits in Hood Week, which is good. But the fact that they didn't lead with that, like, honestly, this is my honest thought right here, is a little concerning. The fact that they did not, in their opening remarks, saying, and by the way, we're seeing continued momentum going into Q4 with over $2 billion of deposits as a part of our Hood Week promotional blah, 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 which they did for the past 2 quarters in a row, makes me think, is that all you got is $2 billion, which would be down from September, which was at $2.5 billion, which is, not the best? Or are they, did they get a lot more than $2 billion, but they just didn't want to give that guidance? I don't know. I would imagine you would want to say, if you had a $5 billion month deposit of October, you would say that, right? And there's nothing illegal for them to be able to say that. So that part was a little concerning for me. Wasn't sure why they did that. And the only conclusion I'm left to have is that maybe October wasn't as big of a month as they expected when it comes to deposits. So let's talk about the good things. 100,000 gold card members. That's good. It was at 85,000 a couple weeks ago, so they are adding, it looks like 15,000 a week or 15,000 every 2 weeks, which is a good pace. They did say they have 2 million on the wait list, which is incredible. 2 million versus 1 million that they had, I think 5 months ago. It means they added another million people. That means they can add a lot more gold subscribers, because to be on the Robinhood credit card, you have to be a gold subscriber, which means they can get you off the wait list into gold. That's an ARPU of already $60 immediately when it's $5 a month times 12 months. So that's good, but they only have 100,000 gold members that actually have the credit card in action. And credit card revenue, although Vlad said things are going well with it in terms of they're seeing the right data from the cohort analysis that they're doing, which is fine. I think they probably are. Revenues themselves went down sequentially 6 to 4 million. Again, the credit card doesn't make a lot of money, but it's not like it's going to be a big money maker, I would say, at least for the next couple of years. I mean, if they're going to be this slow rolling it out, which they should be, it will take time to see that kind of ramp up. They are winding down the 1% deposit boost. So they officially said that, hey, we are not getting a ton of money from the 1% deposit boost. And, you know, that's a sign of maturity to me as a company that's saying, hey, we had this offer. We thought it was good. I love the 1% deposit boost. But if it's not working, if it's not increasing from the unit economics that they're looking at in terms of increased growth, then yeah, you got to get rid of it. And it is what it is. As a company, you have to make that decision. They bought 5 million shares at $19.40. I think that's a great buy. We'll see tomorrow if it dumps to 19. Maybe that was a horrible buy. But buying 5 million shares at 19, look, it's not the 14 bottom on August 5th, but 19 is way lower than where it got to at 28. So I actually like that they bought 5 million shares, spent about $100 million on that, which was a good thing. Someone said Vlad said they had 4 billion in net deposits in October. I did not hear that. If anyone has the exact quote, I would love to get that. If they did, that's really good. I might have missed it. And if they did, 4 billion is great. When that means 2 billion was because of the Hood week, which they had for 2 weeks, and then the other 2 billion probably just came from organic deposits. That would actually be really good, and that would set up October to be a good quarter. But I just don't remember hearing that. So this contra revenue thing, let's talk about this. In the previous slides, yes, they did say 4 billion for the month of October. Okay, so I missed that. I don't know how I missed that. I guess I was like getting a bunch of other stuff ready on the sides. I was getting all these documents out. So that's a good thing if they had 4 billion. That's not bad. It's actually really good because in September they had 2.5 billion. I don't know how. Also, none of the analysts really asked about the deposits in September. I was surprised that I guess the analysts didn't care that much because still 10 billion of deposits is incredible, which it is. Again, we just have high expectations for Hood because they've been putting up these 3.5 to 4.5 billion dollar deposit months. But if they started October with 4 billion, that is a good thing, and that should hopefully lead to stronger growth going into Q4. Okay, so contra revenue. This is the first time I'm seeing this slide on the deck. And I'm assuming contra revenue is revenue they have to pay back out. I haven't really seen this topic before that they're talking about, or at least maybe they included in previous slide decks, but I didn't really see those slides, which I feel like I would have if they did. So not fully sure what this means, but what I think it means is that the matches that they give. So I'm reading right here. Contra revenue associated with match incentives paid to customers is allocated across transaction-based revenues, net interest revenues, and other revenues as a proportional basis. For details on the allocation of contra revenues, go to page 3 in the appendix. So what I think this is them giving back money based on the money that they're getting, if I'm not wrong, which is negative for them. Now, granted, they're bringing a ton of money through deposits, so that's the reason they're doing it. But I think that's the... Okay, yes, I'm correct. So it is negative. So they lost 27 million in Q3. Otherwise, they would have had 660 million of revenue. Instead, they had 637. And then in Q2, they had 13 million of contra revenue. So that's a more than a doubling of contra revenue in Q3 versus Q2. That's another reason this quarter was against my expectations. I didn't know what the hell contra revenue was. Like I think they didn't put it in the Q2 slide deck, because if I saw that, I would have adjusted my projections and say, okay, they're going to lose this much, or they could lose this much. I didn't look at this at all. And that's another reason my projections were probably off. So down 27 million. It looks like that's going to be the same in Q4. I'll go back in the earnings call and see what he said about contra revenue. And that's something we have to take into our estimates as could be a tailwind or a headwind going into Q4. Contra revenue refers to a type of account that is used to reduce the amount of gross revenue that is reported on a company's income statement. It is used to account for deductions from gross sales. All right, so contra revenue, that means declining revenue, money you have to give back, I would imagine, for bringing over those deposits. And even though they're amortizing that, they're bringing over a lot of money, so they're going to have a lot of contra revenue. So it's just something I think that's the other thing. I don't think analysts projected that much contra revenue because if they did, they probably would have lowered expectations by 10 million, and then we would have beat. And the things would be maybe a little different in regards to the analyst expectations. Here's another thing I was thinking about: if the analyst expectations were a little bit lower, and this quarter was perceived totally differently, I wonder what that means for the stock, right? It's like if I'm expecting you to do 50 million of revenue and you do 38, that's bad. If I'm expecting you to do 34 million of revenue and you do 38, that's good. You could still probably drop from only doing better by 4 million, but do you drop as much as we're seeing Robinhood drop right now? If you don't drop as much and it's just a analyst expectation paradigm for why the stock is falling versus something fundamentally broken in the stock, which as of now I'm not seeing, maybe that is a buy the dip for the stock. I mean, we're going to see kind of how the market reacts to it, but if there's not a fundamental thesis breaker, I don't know if that's necessarily a reason why the stock should be down at the levels that it's at. Where is Hood stock? Let's take a look at it. Meta, by the way, down 3.2%. So Meta's getting hit right now as well. Hood 25.39. All right, down 10%. It was down. I think it got to 24.91, and then on the real dip, as soon as the earnings were out, they showed us 29 to tease us, but 22.98. So that's where it was immediately. Dip got bought up there, 25.19 right now. In terms of my raw thoughts on if the stock opens above or below, I think tomorrow there's some more pain. I don't think they said anything in this call that was exciting or interesting or unique or, got the street like to think that there's some. Also, I mean, Vlad didn't have the best answer to the guy that said how many people are using Legend. I know Vlad can't give an exact number because it's not rolled out, but the answer was lacking in substance, in my opinion, in terms of like what he cared about. And that guy, Craig from Bank of America, he has the highest price target on the street at 33. So that's a guy that, even if you can't give him the exact numbers, I would spend like another 30 to 45 seconds really trying to give a substantial answer, because he's going to be writing a note tomorrow. And, you want him to kind of have a solid understanding of what's happening with that desktop platform. So I think there were some details lacking across the board, not details that are like needed, because obviously they can't give some details, but some details that were like, all right, if this was a really bullish quarter, they probably would have disclosed that. And that's not what we saw right now. Are you buying the dip right here at 25? No, I want to see how it opens tomorrow. I mean, look, I've got a ton of Hood. I'm not in a hurry to buy more on the dip. I want to see, can we stabilize at, if I have to buy it at 26, I don't care, but I want to see if this stabilizes here, or if the market opens up and they're like, nope, screw it, this sucks. I don't think we get a reversal back to 28 tomorrow. Let me just say that. The difference between this and SoFi's reversal is because SoFi has been stuck in a channel for a while. Hood has not been stuck in a channel. Hood has been, breaking out to the upside. So this is a stock ran up a lot, double miss. Earnings call didn't go that well. Stock falls. A reversal would be super bullish back to 28 tomorrow. I don't expect it though, because it's one of those things where the quarter wasn't that amazing. Also, SoFi had a triple beat, so their reversal was a little bit more justified because obviously the quarter was very good, and people decided that it's worth buying the dip on that. So yeah, that's the other thing, as Doug says right here. SoFi had a triple beat, Robin had a double miss. Again, SoFi's triple beat was against analyst expectations that I guess, were in line with what SoFi was able to beat. Either the analyst expectations were way too high, I've got to go deeper and kind of read through those expectations, or Hood legitimately was not able to live up to those expectations. And I would say I would blame Hood on the net deposits front. That not living up to more than 3 to 3.5 billion, that's Hood's fault. And that's where they probably come short of expectations. And also crypto sucked. Now, granted, in my analysis, I said they would make about 60 million off crypto. They did worse than what I said, but they still brought in 60 million, and that's because their take rate went up. So in October, which has been a bullish month for crypto, if we see some serious volumes and they have that new take rate, which is 0.15% higher than it was before, that could be bullish for the crypto revenues that we see into Q4. Okay, what else did they say on the call? Robinhood right here, 25.15. So I missed that they said 4 billion in October. I really missed that. I don't know how I missed that, but I'll go back and see if they did say that, then everything I said in the beginning about them not leading with that number being bearish, I take that back, because if they led with that number and I just missed it, then that was bullish. So 4 billion is good. They said the 2023 match promotion has already paid itself off. And they said for the Roth IRA accounts, it'll take 3 years to pay off the 3%. So they're expecting these customers to stay for a long time. Vlad also did talk about the relationship that gold subscribers have with the platform, which again, gold subscribers up another 200,000. It's pretty incredible, dude. 200,000 in 90 days, getting people to pay $5 a month is not easy, especially when you're not giving them that 5% APY. But I guess people are subscribing to it because there's other parts of it that they see that's valuable. And I think that's only going to continue. Again, we got right there, record 2.19 million, which is bullish at the end of the day. Presidential election is not available to all yet either. So Robinhood just put out a tweet that it's available to all people. I would update the app. If it's still not there, then I think it should be there by tonight. I got it late last night, so it probably, might just take a little bit of time, but I'm pretty sure it'll be there pretty soon. Can we talk about something else? Hood's going to Derek says that as an owner of Hood. I don't think we're going back to 19 unless so it begs the question here. Is the market at a top right now, right? Are we topping out a little bit in this market? Given the earnings growth that I'm seeing, and look, Robinhood still had a phenomenal quarter, even if these expectations were a little too high. I don't think we are topping out in the broader market. Now, I could be wrong. I think the election is going to have a lot to do with that. And if someone wins that the market is not happy with, maybe this thing gets even a little bit more dicey. Here's the thing. Now that Robinhood fell, I think there's an argument that a lot of people are going to have tomorrow. Palantir also down 3%. I don't know why they're down 3% after hours. I didn't see any news. You guys are saying Carp selling. Carp sold yesterday and the day before. He did not sell today, not from what I'm seeing. So I don't know if that's the reason, but Palantir's down as well. You're going to have a lot of people going into November 4th thinking, hey, maybe I should protect some gains and maybe I should take some off the top. And that could also compound the selling, which is another reason I don't know if Robinhood rebounds to 28 tomorrow. I think people are going to be scared tomorrow, which is normal. I mean, people are probably up a lot on the stock, want to protect some gains, take some profits. I think that'll, 21, 22, that's an amazing dip opportunity, but we got to see if it ends up getting there. Bitcoin's still doing well. It is down from 73.6 or down from 72.7 that it was there an hour ago. Now it's 72.37, but this is the third day in a row of holding 72 or holding the 70s, which is not bad. And I think that's reasonable to see. Bruni says your target of 25 by end of year is realistic. Yeah, my target has always been 25. I don't know if I'm going to re-rate that target down from 30 because I did upgrade it to 30 after the Hood event and the deposit promotions that I saw. But given these earnings, I don't know. I got to really look through the numbers, and really the October numbers will help me figure out if we're headed to 25, below 25, or closer to 30 by the end of the year. Also, the election is going to determine a lot, guys. I mean, that election's very important, and the market's reaction to that is also very, very important as well. What numbers come out next week for Hood? It'll be the October numbers for their monthly metric. Okay, so conclusion on Hood. Subscribers were amazing. Options were decent, not the best. Equities were decent, not the best. Deposits were bad, in my opinion. Operating expenses were fine. Buying back 5 million shares was great. Contra revenue doubled, something new that I'm learning about. That was not the best, but something that you have to do to get more deposits. EPS also, they missed by 1 cent on EPS because of a regulatory accrual thing that the CFO mentioned, which means they wouldn't have had a double miss if they would have had 18 cents of EPS versus 17 cents. So that's another kind of, if the street's upset they missed on EPS and it's by 1 cent because of something regulatory, then maybe that's also stupid as well. And then the final thing I'll say on Hood is that projections going into October seem bullish, but we've got to see how October turns out in order to kind of justify if we will have a decent end of the year. Also, gold subscribers, again, adding 200,000, not easy, and that was a good thing. And retirement accounts at 10 billion AUC with deposits at 10 billion, not the best, but still really good at the end of the day. So I think it was a good quarter. I just think expectations were too high, and that's why they got smacked. Doug says, would you rather have contra revenues with incentives to account holders, or would you rather have a giant marketing spend on celebrities and athlete endorsements? That's a good point. I would way rather have contra revenue with incentives to customers, not spending on Taylor Swift for her to talk about Robinhood. That would be an important thing. Okay, cool. So that is what I got on Robinhood. Yeah, I definitely think the 3-day rule is applicable here. I think 3-day rules is very important. This may be election uncertainty. That's another thing. You got a double miss, even if the expectations were a little bit too high, and you've got election uncertainty, you'll get some sell side pressure. And tomorrow we'll kind of see how the street ultimately thinks of it. Okay, what else do we have after the bell? That was Hood. And again, I'll write more about on it on Twitter later today. And tomorrow in the morning, we'll talk more about that as well. Palantir's down. I don't know why Palantir's down. If someone has a logic for that, please let me know. Because I don't know. If it's insider selling, that happened a couple of days ago. Nothing happened because of insider selling. Maybe the SEC filings are hitting the Bloomberg terminal today and people are upset that Carp's selling. So maybe that's one reason. Another reason could be Microsoft's call was not the best. Where's Microsoft after hours? Microsoft down 2.4. I'll do some reading into why, but look, down 2.4 at a market that's all-time highs, I think is decent. Remember, the reason Google's up is because Google was sold off for the past 3 months. If Google was trading at the multiples Microsoft was trading at, I don't think those numbers get Google up 7%, right? So Google was oversold. You could argue undervalued, and that's why I think it went up. Microsoft and Meta are totally different. Google was up 19%, Meta was up 65%. So it makes sense that Meta's taking a little bit of a breather here, down about 2.5%. SoFi as well, down about 0.8%. SoFi holding up decently after hours, even with the hood drop. NVIDIA down 0.4%. SMCI down another 2% after being down 32% for the day. Riot got smacked, down 7.16%. Reddit had a great day, up 40%. And then Enovix right here, down about 5% on the day. Google is up 2%, really, after hours? That's hilarious. Well, it's oh, wow, Google's 7% turned into 3%. Google was at 181. Now it's at 176. Interesting. I guess a lot of stuff sold off right into the close as well. Microsoft selling off right now. Something they probably said in the call is getting the street upset. Yeah, there you go. 4% down on Microsoft. That's a big move. It was up after earnings, and then it became flat, and now it's down. Palantir's down 2.5. Google's down 0.5%. Google's giving up most of the gains that it got after earnings. NVIDIA's down. SMCI's down. Where's the S&P? S&P should be down after hours. S&P is down 0.2%. After being down 0.3% for the day, we got 578 on the S&P 500. Carvana, yes. So Carvana beat EPS, guys, by like 40 cents. That's why Carvana's up 21%. Also, Carvana beat revenues, I think, by like $2 billion, if I'm not wrong. Carvana stock now, year to date, is up. So they're up 700% in the past year. Year to date, if you bought it January 1st, you're up 324% on Carvana. I mean, used cars, baby. Used cars are going up. Seems like the market likes it. Microsoft still puking right now. Yeah, down 4%. Palantir's down because the AI stocks are taking a hit. I agree. Where's Apple as well? I think you're correct about that. Apple's up. Dude, if Robinhood missed by 1 cent on EPS and tanks 11%, I don't even want to know what's going to happen to Apple if they miss on demand projections for the iPhone, or if Amazon misses on operating income. That's not going to be fun for those names. Or if Palantir misses on the top. Again, so I don't think Palantir is missing on the top and the bottom because they're reaccelerating growth. But I think they might not, perform like 40% growth. It might be 27, 28, which is still really good. But is it 40 times price of sales good? I don't know. The street's going to have to figure that out. I think Hood is a wake-up call to every company that might slightly miss or might be a slight beat, but it's trading at an elevated level that the market doesn't care right now, especially before the election. And Palantir is literally the day before the election. Now, granted, that might create great dip opportunities. And honestly, I would not mind if Hood goes back to 21, 22. I think those are great buys given the growth that we saw. I think it's going to be hard to see that tomorrow, but I could be wrong here. And, 25.30, it's kind of developing a little bit of a recovery at 25.30. 4 a.m. tomorrow is where we're going to see if the pre-markets tank it a little bit harder. Where's Coin and MicroStrategy? Coinbase. What are your guys' thoughts on Hood and everything else you're seeing? Let me know what you guys think. I know it looked like I was a little sad during the call. I mean, yeah, when it was at $28, it was great, and now at 25, it's not as great. It's $3 less great. But I'm not sad. This was not a quarter where I'm like, oh, the company that I've been analyzing has completely changed against my expectations. This was a quarter where September sucked in comparison to what I thought it would be. And that's why the quarter underperformed, even though, I'm saying 36% growth is underperforming, which is 36% growth is incredible. It's just expectations are high, and that's fair. But no, I'm not sad on this. And if we do drop to 22, 23, I will be buying a lot. I'll probably buy another 1,000 shares if we get there. But we got to see how the market reacts. Apple up a little bit, Coinbase down 4.8, and then MicroStrategy down 3.85. Both of them down about 4%. Call was bad. I still have faith in Vlad. Yeah, I agree. Call was not good. They got to find a new moderator for this. I don't care if they're in a different country, dude. Like, find someone who's good and find someone who's not in a different country. Like, can we get you? Robinhood makes a lot of money. They can. I don't care if you got to pay them $1,000 for the hour, dude. This call really matters. It controls billions of dollars in market cap. So find someone who you can adequately compensate, who's not asleep between every question. And it's no disrespect to the moderator, but there was some disconnect, whether it was the internet connection or something, and that just makes for a crappy experience. And like, Palantir always has a great call because they do a video, and the video lets you see everybody, and things are decent there. I wish they would have some more analyst questions besides Dan and Mariana, but still, I feel like a lot of companies need to adopt that, and that's important. Amit should do it. Oh man, that would be funny. But then I couldn't stream. I need to be here for the stream, otherwise that would be bad. Amazon's dumping. Where's Amazon? Yeah, Amazon's dumping too, down 1.6. Microsoft and Meta pissed off big tech, and Google took away their gains. Apple's barely up. Nvidia is the last one that kind of didn't get hit too hard after hours, but SMCI hit Nvidia as well, which is bad. Yeah, right here, 189 for Amazon. What else? Amit, are you hedging the election? I don't know yet. I don't know. I still have a couple days to decide. I mean, maybe I sell some covered calls on stuff that could be a hedge to the election. I don't think I'm buying puts. I'm not doing all that. I think relatively, again, unless the Democrats sweep, which I don't think they're going to do that, but I could be wrong. I think it's going to be hard to get corporate tax rates to go up, which is the big policy the market cares about. They don't give a shit about a lot of stuff. They care about corporate tax rates. So if the Democrats don't sweep, they don't get that passed, even if Harris wins. But also, if Trump wins, I don't know if the market thinks tariffs are amazing, right? So it's a lot of uncertainty. I do think the market wants Trump more than Harris, but I think either presidency is not going to have that much of a big impact on the markets. Like, as long as company earnings, as long as Nvidia keeps selling GPUs, like, I think they should be okay. What else? R says if everything else is down, it hurts less losing on Hood. Well, the good thing about this is the memories, right? That's the we will all remember. I think there were 2,800 people when Robinhood was up 6% and it was at $29, and then it just crashes down to $22.98, and all of us are just like, "Oh, I'm fucked right now." It's like, at the end of the day, it is more fun with a community. A, B, it's the nature of markets. All right, this is what happens at the end of the day. This is the cycles you got to go through. This is the risk you take of picking an individual company and trying to compound your capital, which is why we do so much due diligence on the leader, the management. Can we trust them? Blah 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 blah. And it's what you deal with in the big boy world. I mean, in the big boy world, when you're investing real money, you have to deal with this stuff. And I know a lot of your portfolios was down today. My portfolio was down after hours, but there are people that are much wealthier than a lot of us that have probably been down a lot more money, and you deal with it because this is what it takes when it comes to investing. FIFA says, F the memories, we need the cash. I would rather have the cash over the memories, but if we don't have the cash in the short term, at least we have the memories. I think Robinhood did say they had 10 million election contracts traded in the past 2 days, which is really bullish. I mean, it seems like the adoption of those contracts was huge. So that was good. That was another, I guess, silver lining that we saw from that. I mean, again, to put that product out in a day and get 10 million contracts, that's like crazy strong user adoption. And it means the product is decent that they put out as well. What else do we have? DoorDash, they are now profitable for the first time. They're flat. eBay took a nasty hit. I don't know why eBay took a hit. Roku's down 10%. With Roku's Roku. We know why Roku. I mean, that's. I'm just curious when Kathy's getting rid of that, because that one is whatever. eBay's down 6.7. Etsy's up 7. So there's a disconnect here between eBay and Etsy. Both affect the consumer, but I'll be going through their transcripts tonight and seeing what's wrong. Robinhood down 10.4, Meta down 2.2. I think Meta had one of the best earnings I've seen out of big tech so far. It's just, again, expectations were high. The good thing about Google is because they were down so much, expectations were low, which is why Google was able to beat. And it's so funny, this kind of like cat and mouse game of the market. It's like, what do these guys think? And how can we do better than what these guys think? But do these guys really matter? Well, some of them do, some of them don't, but arbitrarily they still make the basis for how the market, thinks of this stuff. And this is like objective stuff you can't get rid of. Like there will always be analyst expectations against the company in the stock market, and it will always be the same investment bankers that come up with these expectations. So a lot of companies, they just have to be really friendly with these guys because they truly do determine the trajectory a lot of times with price targets. They can be wrong a lot of the times, but they when they put out a note, there's a lot of money that rides on that note. And it just depends on, can you beat those expectations or can you, potentially live up to them? MicroStrategy back a bit as Biddy barrels onto new highs. MicroStrategy did outrun Bitcoin. I think MicroStrategy is properly taking a breather as Bitcoin, even if Bitcoin's at 72. But if Bitcoin goes to 80, 90, I think MicroStrategy is probably closer to 300. So we could see that happen, especially if he's going to buy $20 billion of Bitcoin, bro. I got to talk to some people today and see what they think about that, because that is, that's a hell of a move. Tesla also down 0.5%. Tesla not down that much. It was down a little bit today, 0.76%. Microsoft and Meta not really taking them down. Derek says, this is why I love Bitcoin. No CEO, no news, only 21 million coins, zero drama. You're definitely being sarcastic about the zero drama part. I agree with you. There's no CEO. But the drama is rampant when it comes to Bitcoin. Here's the question. If we are top in the market, Bitcoin's going back down to 50,000. If 580 is a top in the S&P and we're going back to 540, 550, beloved Bitcoin is not staying at 72,000. Bitcoin moves with the NASDAQ. Put a chart of Bitcoin on top of the Qs. They move almost identically. When the NASDAQ was down at, 11,000 in 2022, Bitcoin was at 15,000. So it's like, if the market's topping, Bitcoin's topping as well, which is why I don't think the market's topping, because we're seeing this momentum in Bitcoin. I know we're getting a rate cut that's going to be good for the market. The only way I think the market could be topping is if earnings are bad. Earnings are not bad so far. Earnings are not bad. Meta's are not bad. Microsoft's not bad. Google was not bad. We'll see Apple and Amazon. Robinhood was not bad. Palantir we'll see soon, but I don't think they're going to be bad. It's just valuations might be stretched, which means stocks can come down. But if earnings are not fundamental, remember 2022 when Zucks was losing $70 billion a year on Reality Labs, and as a result they had 70,000 employees when they only needed 50,000. Like, those were really bad fundamentals. And that's why those stocks fell, because the stocks were overinflated along with the fundamentals. Right now, the stocks are, you could call them maybe overinflated, but they're living up to the fundamentals. They just might not be able to live up another 10, 20, 30% in the short term to those fundamentals. And I think that's why we're seeing some of the volatilities to the downside we're seeing in the markets. If the market's down, a lot of people will turn to Bitcoin. I cannot disagree more. If Israel does anything tomorrow, tonight, in the next 10 minutes in the Middle East, Bitcoin's down 2%. Like, Bitcoin immediately reacts to bad things that happen. And if the stock market falls 10%, like, the last place people are going to go to is a cryptocurrency. Like, they're going to go take that money and hold it and save it, get 4% cash on their yield on their cash, and hold on to dear life. They're not going to Bitcoin. And if I'm wrong on that, I'm wrong. But that historically, we have not seen that. When things go bad, people leave Bitcoin. In fact, they might go to gold, and gold's kind of giving us a signal that things maybe not be the best, even though rate cuts are bullish for gold. But gold right here, JP Morgan or Goldman Sachs said it can get 3,000 next year. Seems like it's possible if it keeps on this track, but gold's already at an all-time high. And I think more money would go there versus if Bitcoin goes down. Derek says, I agree, but one day this will change. Yeah, I mean, there's a world in which the U.S. prints so much money that one day Bitcoin might truly be seen as the only place to actually store value, given the erosion of the dollar. But it's just, that's not the day. That day is not here yet. So I guess we're going to have to see. What else? Where's oil prices right now? Oil is slightly up at 69. That's okay. Nothing too crazy. Someone said, Amit, do you have Archer yet? I don't have Archer yet. I'm still doing my due diligence. Probably over the weekend, I'll have like a one-pager ready to kind of analyze them. But look, I don't know if it's cheap or not because I haven't looked at the financials, but I do think it's worth a gamble if you're bullish on that industry because it's a $1 billion market cap, right? So either you're wrong and it goes to zero, or you're right and we get to 2, 3, 4, 5 billion over the next couple of years, which is a decent return. But it is, to me, a startup that's public more than anything, and it would kind of be taking a bet, even if the financials don't look amazing on it. Hey, Amit, since no one has asked, why is Palantir down? I don't know. I know you're being sarcastic there, Bay Ray, but I don't know why Palantir is down. I think the only reason is AI companies are down right now. Palantir is now down 3%. So it's down a total of almost 6% for the day. We went basically from 45 to 42.31. And that's why it is down right now. What do you think silver will do? I don't know, dude. I mean, look, what I'm being told is that if we have a recession, that's great for silver. I don't know if that's necessarily true. That's what I've read about silver. Historically, that has been correct in certain instances, but I don't necessarily think we're getting into a massive recession. Granted, I still think there's other industrial use cases of silver that are bullish, but there's no earnings for silver, right? So it's really gonna be dependent on inflation, unemployment, and kind of where the economy is ranking up to determine if the market wants to hedge with silver as we get more rate cuts. Look, if you had covered calls on Hood, that's great, right? So that is, a lot of people shit on covered calls, and over the past couple of weeks, covered calls have been shit on because everything's been going up. This is why you sell covered calls. This is why TJ loves covered calls, because you just don't know sometimes when shit goes south. What if Palantir actually does go to 35 and you sold somebody a call at $50 or $46 or $48 for December? It's hard to go back from 35 to 48, right? And that person who paid for you is out of luck. He's down 99%. You're up 99%, and you take the call and you move on. And you can use those 100 shares to essentially guarantee you income. Now, look, that doesn't work when a stock's in an uptrend, or it works, but it's painful. But if a stock has a surprise miss on earnings, then those covered calls end up printing pretty well. But again, I think we're going to have to wait till the pre-markets to see what happens with the Hood. It's slightly recovering, slightly not recovering. I think pre-markets will give us a better understanding of it. Amit would love 1 to 2 minutes from you on how Starbucks is up while business fundamentals seem to be trash. I think the 3 letters there are CEO. Market's putting a lot of trust in, I think his name is Brian Nichols, to deliver. And maybe he does, maybe he doesn't. But look, you got to give him the benefit of the doubt. And it seems like the market is trusting that he can turn things around. I agree, though. Fundamentals, not the best on Starbucks at all. Like when I saw North American traffic down 10%, I mean, that's their biggest market. So they've got to believe that Brian Nichols can just flip it around. And I think that's why they're keeping Starbucks up. All right, guys. I think that's it. There's not that much else. I'll be back tomorrow, market open. In good news, I do have a podcast coming out tomorrow. I think you guys will really enjoy it. And I finished editing it today. It'll be fun at 7 p.m. tomorrow. So that'll be out. Tomorrow we have what's his name? Tomorrow we have Amazon and Apple. So that'll be important. And we have Intel, I think. And then in the market, we have a couple other companies as well that we have to look at. And then on Friday, we have the jobs report, which could also be good. So that jobs report might help the broader market as well. We also get money market fund data tomorrow. They went up by like 40 billion last month. Or last week. I imagine they're going to go up again this week to hedge against the election. And so we'll see what happens. Pock says when Amit says he's wrapping up, that means we're around 1 hour from the end of stream. Okay, that's only happened like 7 times. So I don't like the generalization here, but that is true. That does tend to happen. Doug just sent me this. When Amit learns what contra investing is, or contra earnings. Look at that. Dude, this is the first. You can't blame me. They didn't have it in their slide deck last time. They had to put it in the slide deck this time because they paid a shit ton of money back out, from 13 to 27 million. So that's why they had to include it. Okay, I think that's it. Again, it is what it is. Shout out to Michelle. She sent me some Halloween costume ideas. Look, I was more motivated to come up with a Halloween costume idea if Robinhood had good earnings. Now, I mean, look, I'm not that excited to dress up for Halloween anymore. I'm human at the end of the day. You see a big holding go down 10%, you're just not that excited to find a Halloween costume, but we'll see. I also got to read through a lot of shit right now. So I got to figure out if I have the time to come up with a Halloween costume, but hopefully I can come up with something tomorrow. Maybe I can show up as good earnings for Robinhood. Maybe that's what I got. Maybe I can just wear something that shows the stock at $29. Like maybe I can take a screenshot of when the stock was 29 and just wear that all day. That's a decent outfit. Maybe I can come up with. All right, that's it. Thank everybody for being here. I'll have more analysis tomorrow. We'll get through it and we'll keep going from there. 8:45 a.m. Happy Halloween Eve. I'll see you guys tomorrow on the market open. Big day tomorrow with Apple and Amazon, and we'll keep going from there. Thank you, everybody. Appreciate it. Thank you all for joining. I'll see you guys tomorrow on the market open. Bye, everyone.